Hello. 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 Hi all. I think it's audible now to everybody. So, hi. So is it audible for everyone now? So quickly. Yes. So let me quickly, sir, for the first 2 minutes. So many are asking questions, right? So let me answer those questions like quickly. All your queries. First one, yes, ebook will be made available. It's not available for download, so you can buy the course and you can view the soft copies. So I already instructed our online team. So within like 10-15 minutes, they'll notify you. They'll share it in the groups also. That one. Then next one. Someone is asking about DT revision series. Yes, the DT revision series will continue. The day 4 content will be uploaded by Wednesday. I mean, in that video, I'm gonna upload NR tax, non-resident taxation, transfer pricing, and DTAA. And then by the next Saturday, you could even find out the assessment procedures, appeals, those chapters part also. Okay, done. This is done. And anything else? Okay. Someone asked like how long this takes. Sir, customs I wanted to cover full-fledgedly, sir. So maybe today I'll take and tomorrow also I'll take it for 1.5 hour or 2 hours also for tomorrow also customs. So around 6 hours I may take for customs itself. Then FTP part, if you are searching for FTP part, then you need not to again foreign trade policy. Again, sir, we need not to discuss it here. Whatever we discussed in the Superthon, okay, Superthon, that would be enough. So you go through the Superthon, okay, that Superthon is a separate Super 50 questions video which is recorded, that is available. Then, okay, so I hope most of the questions has been answered, right? Okay, then. So let me discuss about IDT. Okay, then MCQs. MCQs will get released in next week. This week I'll be discussing or I'll be completing my revision series, both DT and IDT. In next week I'll be coming up with the MCQs. So IDT paper pattern, if we see, sir, how it goes, like there'll be 15 into 2 marks. Question number 1 will have MCQs 15 into 2 marks, which is for 30 marks. Then we have question number 2, 3, question number 4, question number 5, question number 6, question number 7, question number 8. So now in question number 2, 2A, 2B. So what is being asked from yes, old Superthon is only enough. Yes, practical questions also wherever required I will solve. Question number 2A, it could be from supply, sometimes it could be even from e-waybill, sometimes it could be from e-invoice chapter. I have seen the recent MTP, sir, where they put a question regarding composition scheme. They have kept a question regarding composition scheme. But I think mostly they're gonna ask about composition scheme. They're not going to ask, I feel like, from composition scheme, even though it is there in the mock test paper. From 2A, I'll expect like the supply, e-waybill and e-invoice part is only gonna happen. Composition scheme, I don't think it's gonna come, even though it's there in the mock test paper. Then 2B. 2Bs are always a standard question returns chapter. Okay. So for question number 2 content, will not be discussing anything in this revision series. These topics which were needed to answer question number 2, for that you could blindly follow the Superthon video. Okay, that is very much enough for solving question number 2A and question number 2B. Then question number 3A, it could be from exemptions topic. It could be from exemptions topic or from some other concepts also it could be, sir. It depends, sir. Sometimes it could be exemptions, sometimes it could be even some other chapter also. But exemptions chapter, sir, last attempt they asked exemptions question, and this in this revision series we gonna cover exemptions thoroughly. Exemptions also thoroughly we gonna discuss in this one. Then 3B, it's about what? ITC. 3B is from ITC, and again in this revision series we gonna cover ITC chapter also. So for answering question number 3, there might be content even in the Superthon also, but this revision gives you much more clarity. Okay, so we're gonna discuss much more detailedly. I don't want to, I don't want to take any chance. I'm gonna cover ITC end to end in this revision series. Okay, so if you are someone who wanted to have full clarity about ITC, then this revision series is gonna helpful to you. Revision series. Okay, then question number 4. Question number 4. It's about TDS or annual return. Okay, that part again we need not to discuss, sir. So that part Superthon is only enough. Okay, so I'm not touching it again here in the revision series. Whereas question number 4B, again 4A is done, 4B. Question number 4B is from place of supply. Okay, mostly place of supply, sir. But in the last attempt, it is from value of supply also. It could be even from value of supply also. Okay, so this part, this place of supply part, value of supply part, again we gonna cover it in the revision series. We gonna cover it in the revision series. Then question number 5A, time of supply, sir. Not required, like you could follow Superthon. And 5B, again value of supply, we're gonna cover it in the revision series. Question number 6, FTP. Completely you can follow the Superthon, the video which we already uploaded for June 2025 exams. Question number 7, customs. So detailed customs is not there. The customs itself is not included in the Superthon. So I'll be including it here in the revision series. And question number 8 related also. 8A, they're asking from appeals chapter. So we're gonna cover appeals chapter also in this revision. So let me tell you, sir. If you see this revision series, what are the chapters we gonna cover, sir, in revision series? We gonna cover the chapters like customs completely, sir. Not FTP, only customs part. Customs completely. So from customs, how many marks is there, sir? 14 marks. That part we gonna cover. Customs part. Then we gonna cover exemptions here. Exemptions. Then place of supply. Value of supply, ITC. Then we gonna cover even assessment. And then appeals. These chapters. So what is the weightage, sir? So exemption, sir, there could be 7 marks. Place of supply, there could be 7 marks. Value of supply, ITC, there could be together, sir, because they're asking 2 questions, sometimes from ITC. It could be even under 8B. So 21 marks. Assessment appeals, here some 7 marks. So in this revision series, we're going to cover 21, 28, 35, 56 marks. The other part, like in Superthon, if you watch Superthon, then we have FTP of 14 marks. Question number 2 of 14 marks. And then TDS pro concept 7 marks. Time of supply another 7 marks. So total 28 and another 42 marks. So total, sir, we are taking the maximum, sir. It doesn't mean like it could be beyond the weightage, because we have only 7 into 14 marks na, the most, including the choice. Including the choice, we have how many? 7 into 14 marks. So 7 into 14 marks will come to how much, sir? Like 70 plus 4 sevens, 28. We'll get together for 98 marks. Here how much, sir? Here for us also the same, 98 marks. 98 marks, 56 plus 42, 98 marks. So what I am suggesting you is, like, if you watch the Superthon and this revision series, the whole 98 marks related content will be there in this series. You can get. So someone asked a question previously, will I get exemption from this? So that's about how much you prepared. One thing is for sure, sir, we cannot go detailedly from the basic concepts. Customs, I can say, because customs from beginning I will take it now. So you will get the clarity, whatever is needed. I think hopefully it may suffice your requirement. But GST part, since from basic supply and all I'm not discussing, so I'm straight away going into the concept. So you need to put your effort. So once you have that basic understanding and all, then obviously you can rely on this. Then MCQs part, sir. Yes, MCQs I'll do a separate video. I'm gonna release that PDF also. So MCQs part, I'm gonna release it separately. Okay. So now, without wasting our time much, so I'm gonna customs. So customs, introduction and types of duty. Article 246. Article 246, sir. So any law to frame, first the power should be from their constitution, right? So the power to levy a tax is with only the government. But which government? Because we have central government, state government, and all. So Article 246. Article 246 has union list, state list, concurrent list. Okay. In this union list, if any matter is mentioned, that means with respect to those matters, central has the power to frame laws. If something is mentioned in state list, then state has the power to frame the laws with respect to them. If something is mentioned in concurrent list, then both central and states has the power to frame laws with respect to them. Okay. So now the entry number, sir, because under this union list, there will be so many matters, because central will frame laws on so many matters. Okay, so all those matters on which central can frame laws will be mentioned in the union list. Okay, so out of all those lists, customs entry number is 83. So this is important, sir, can be asked for MCQ. Entry 83, okay, of 7th schedule of Article 246 of the Constitution gives the power to central government to frame law with respect to customs. Okay, so when the Customs Act is enacted, Customs Act was enacted by the Parliament in the year 1962. Okay, so whatever is the customs we are studying, it's not a single law. Customs is a multiple laws. Okay, we are studying together both Customs Act 1962 and even Customs Tariff Act. Both together kept in place, we are calling it as customs. So Customs Act enacted, already said, in the year 1962. Whereas Customs Tariff Act, sir, what does it mean by tariff? Tariff means rates. Rates. Which rates? Tax rates. Okay, or the duty rates. So such rates, tax rates or duty rates applicable are given in the Tariff Act. So Customs Act will be studied to understand the applicability of customs, when the customs will be applicable, on whom the customs duty levy will be there, how he has to discharge the customs, how the government will assess whether you paid the customs duties properly or not. All these provisions will be there in the Act. But when it comes to the tax rates, okay, there will be so many goods are here. There may be a laptop, there might be a camera, there might be an AC. So all those will not be taxed at a or duty at a same rate. So multiple rates will be there. Okay, all those rates were mentioned in the Tariff Act. Tariff Act consists of two schedules. First schedule, second schedule. First schedule will consist of import duties and second schedule will consist of export duties. Second schedule will consist of what? Export duties. Okay. Then import. What is meant by import? Import means bringing goods from outside India to India. Import means bringing goods from outside India to India. Export. Export means sending goods from India to outside India. Import means bringing goods from outside India to India. Export means sending goods from India to outside India. Then definition of India. So India, the land of India includes not just the 28 states, it even includes what? 8 union territories. So total 28 states and 8 union territories. It's the land. Okay, when it comes to the territorial waters, it's not, India means not just the Indian land we have, even the waters also, up to an extent, the sea waters also will be part of India. So to what extent? The territorial waters extends up to 12 nautical miles from the baseline. 12 nautical miles from the baseline. Okay, then customs waters. Whereas the customs waters extends up to exclusive economic zones. Sir, exclusive economic zones na territory means till that point of time Indian sovereignty is there. Okay, nobody can enter or cross this territorial waters and come into India without a valid permission. If without such valid permission, if they are entering into India, they are violating the security controls of India. So okay, they can be imprisoned, they could be they could be having so much of penalties and all, imprisonment and all will be rigorous. Okay, whereas exclusive economic zone means this is a zone till which India has the right to carry out economic activities. Economic activities na the business related activities. Okay, so these exclusive economic zones extends up to 200 nautical miles from the baseline. Okay, let's say this is India. Here there will be a baseline. From there it extends up to how much, sir? 200 nautical miles. 200 nautical miles. Okay, sir. In MCQ they may ask like customs waters. Indian customs waters extends up to exclusive economic zones up to 200 nautical miles. Territorial waters na extends only up to 12 nautical miles. Beyond 200 nautical miles, so the sea does not end by 200 miles, right? So beyond 200 nautical miles, we call it as what? High seas. Beyond 200 nautical miles, we call it as what? High seas. Then the definition of goods. The definition of goods. What is meant by goods, sir? Goods includes vessels, aircrafts and vehicles. Sir, if you remember the definition of goods in GST, goods means every kind of movable property. It excludes money and securities, includes actionable claims, growing crops, grass and things attached to the land which are agreed to be separated before making supply. Understood? So as per GST, good means what? A movable property. So not only in GST, in any act, good means obviously a movable property only. Sir, but here they started with includes vessels and all. No. If you look at the last point, what they are saying, sir, here also, goods means any other kind of movable property. That means here also goods means what? Movable property only. But still they wanted to include, okay, but still they wanted to explain it much more better. What is mean? Good includes vessels, aircrafts and vehicles, stores. Okay, vessels, aircrafts and vehicles also part of goods. And then stores means what, sir? The fuel, spare parts used in a vessel, then baggage means what? Luggage. And then currency and any other kind of negotiable instruments. Sir, what is the basic difference between GST and customs goods definition means? Sir, understand, GST Act applicable to both goods and services, whereas Customs Act applicable only to goods. So service is not covered under customs. Service is not covered under what? Customs. Here goods and services are covered. So that's why, sir, in GST, goods definition is loosely framed. Okay, it was framed a little loosely. Why? Even though it escapes from good definition, it falls under service. It escapes from goods and falls under the definition of service. Still GST is applicable. But whereas customs, sir, they cannot do such a way. Okay, in customs, if it escapes from goods definition, then tax itself can't be levied. So goods definition is framed little tightly. That's why they are saying what? Good includes any kind of mobile property, and they wanted to clearly say like, even though it's a vessel, aircraft and vehicle, you can call it as good. Stores na the fuel stores used in a vessel. Baggage means the luggage. Even currency is also good. Sir, currency also good. That means from foreign, if I bring currency, will they levy customs duty? No, sir. Then why they include in the definition? Sir, currency is included in the goods definition to have a regulation, okay, to regulate or to monitor how much currency is being carried by a person going outside India and when he is coming to India. Okay, to monitor currency. That's why they include even the currency definition also in the good. But if you remember GST, sir, as per GST goods definition, money is not a good. Money and its equivalents are not goods. Negotiable instruments, yes, even in GST also they are goods covered under actionable claims. Okay. So good includes vessels, aircraft and vessels, stores, baggage, currency and other negotiable instruments and any other kind of movable property. Then we are having a case law. What is this case law says? Associate Cement Companies Limited. What this case law suggests us? This case law says like, sir, where any intangible things, okay, intangibles, nothing but intellectual properties. Intellectual properties. What are called intellectual property? Like a design, drawings, designs, drawings, or some kind of music, art forms related. Okay, art forms. When they are kept into a media, what does it mean by media? Media means it could be a paper form, or it could be a hard disk kind of, or it could be paper form, hard disk, it could be pen drive. Okay, previously there used to be even cassettes. Okay, if these kind of intellectual properties, when they are kept into a media, okay, they are not intangibles anymore. They has to be treated as like tangibles only, and these are goods only. But if you look at the current scenario, sir, these things we are directly downloading from the online. If any music needed, okay, you are downloading directly from a website or directly from YouTube or Insta somewhere. So then there's no media involved like paper, hard disk, pen drive, cassette, and all. Then it's not a good. It's a service only. Okay, but you're buying a audio cassette. You're buying a pen drive loaded with some kind of software or some kind of this music and all. Then they has to be treated as what goods. Where it was said in Associated Cement Companies India, technical advice, information technology are intangible assets. But the moment they put into a media, they put into a media like paper, cassette, disc, they become mobile. Thus they are what goods. Then coastal goods. What does it mean by coastal goods, sir? Look at this one, sir. This is India. This side there is what Chennai. So from Chennai, a ship started carrying goods. So from Chennai, the ship went to Mumbai. Okay, the ship went to Mumbai. So now when the goods are loaded into the ship, okay, the ship crossed. Okay, the ship crossed Indian territorial waters and went outside India, and then again it came to India. So means what? When the goods cross the territorial waters, they went outside India. That means when going there is an export. While coming again there is what import. Again there is what import. Does we need to assess them two times under export and even under import? No, not required. Why? Because these are treated as coastal goods. Coastal goods, na, they are both origin and destination will be in India only. See, goods other than imported goods transported in a vessel from one port in India to another port are called as what? Coastal goods. Then, okay, coastal goods are what? Other than imported goods. That means they need not to be taxed. Assessment. Sir, understands a simple process, sir. Assessment. Definition wise, if you need to try na, okay, you need to put so much of effort to remember. Simply, assessment means you need to determine whether a good is taxable or not. First thing, you need to determine whether it is taxable or not. Sir, here customs, we are not saying customs tax, we are saying customs duty. That way, we need to find out what goods are. Hello all. So many are again asking about the PDF only. We are see I cannot share the PDF as it is, but what we can make is like we can make it available like the soft copy for purchase. You can view it in your laptop or in your mobile also in the BCCA app. You cannot download it. That one we can provide you. Okay. So please understand from our side also. It doesn't mean we're gonna earn something from the book sale and all also. So I'm frankly saying it's not my book. Any of the book from BCCA didn't had any profit margin. It just recovers the cost of the book alone. Okay. So if we share PDFs means okay, so it's not even like we are earning some profit or something from the book also, but the point is like we even stuck with the books and all. So it's a policy across the BCCA. So we are not sharing PDFs as of now. We'll make them available for sale. So please, okay, please don't stress that point many times. Okay. Sir, assessment means what? Determination of taxability. Okay, we'll find out whether okay. So assessment means determination of dutability. We'll find out whether goods are taxable or not. Fine. If they are taxable, okay, if they are taxable, then we need to find out the amount of duty, taxes, fee, interest, or any other sum payable. First, we need to find out whether they are taxable or not. Taxable or dutiable here. Dutiable or not. If they are dutiable, we need to find out the duty or the tax, cess, fee, interest, whatever it is applicable. That is called assessment. But while doing that, what we need to do? We need to consider tariff classification. Tariff classification. What is tariff classification? Sir, tariff act we said na, customs tariff act. So in tariff act, there is something like classification. Okay, tariff classification means a similar group of items will be kept as a similar nature of a goods will be kept as a group. That group will have the tax rates in a group wise. Okay, so that is called classification. You could see tariff item will be there. Okay, this is the replica of tariff action, how it looks or the tabular looks like. There will be a tariff item. For every good, there is something called HSN code or the tariff number. HSN, 8 digits sir it will be. So for every good there will be this 8-digit code and then they will give description of such good. Then there will be units of measurement. Whether such good will be measured in kgs or in meters. So let's say if you see like if it is something like cloth and all, they'll measure in meters. Petrol, crude oil or any other oil, they'll measure in liters. Whereas like other like sugar and all, they may measure in quintals. Some things might be measured in kgs. So that units of measurement, the BCD rate and the preferential rate. Preferential rate means if the goods are coming from one of our preferential country. Preferential country means the country which is a friendly country to the Indian government. So Indian government has notified it as a preferential area. Then such cases, instead of the normal rate, we may tax them at a concessional rate, which is called preferential rate. So all these will be there in the tariff classification, in the tariff. That's why when you are doing assessment, what you are doing, you are finding out whether they are taxable or not. Then you will be finding out the amount of duty, taxes, fee payable. So to do that, you need to know the tax rate. To know the tax rate, you need to go to the tariff classification. That's why you should consider what tariff classification. Then, sir, let's say you got the tax rate, sir, 12%. On what you levy? Let's say you have imported laptop. On laptop, customs duty is applicable. On laptop, 12% you have to apply. So on what you will apply? Based on laptop color, weight, height and dimensions. No, right? Based on value. That's why value is also important. Then, if any exemption or concession available, such exemption or concession also you should consider because that reduces the value. Then quantity, volume and measurements also needed. Why quantity, volume, measurements are needed? Sometimes, okay, sometimes quantity, volume, measurement are also important. Why? because sir, quantity volume measurement also important, because let's say for example crude oil, we'll import so much of crude oil, right? The crude oil will not be taxed or custom duty will not be levied based on the value. Why? Because internationally the oil prices will change frequently. Okay, sometimes they may go so much down, sometimes they may increase more. Okay, the government, sir, if it levy as a percentage on value based on crude oil prices, government revenue also will increase, will decrease sometimes. The government will have a steady flow of revenue, will not have a steady flow of revenue. That's why instead of levying on the value, government will levy on those petrol, crude oil based on the volume. How many liters they import into some 10 rupees, 20 rupees, like that they'll fix a duty amount, per liter 20 rupees, per liter 15 rupees. So irrespective of the value of such good, the government revenue will remain stable. Okay, sometimes it will be levied based on quantity volume measurement. Such way we even require quantity value measurement. And the origin of goods, why origin? Based on origin only preferential rate or normal rate is decided. That's why origin is also needed. Okay, simple sir. Let me put into your brain assessment definition. Assessment means finding out whether they are dutiable or not. If they are dutiable, you need to find out the duty, tax, cess, fee or any other amount payable. Okay, while doing this you need to consider what? Tariff classification, value of such goods, exemption concession available, quantity volume measurement and origin of such goods. Then bill of export. What is bill of export, sir? Sir, I want to export goods. Okay, to export goods I need to take a permission from customs office. How do I take such permission or approval? Can I call them? Can I message them? No, right? I need to submit a form. Such form we present, okay, asking them to allow our goods to export. A form we present. Why? To allow them or to asking the permission of them to allow our goods to export. Such form we present is only called as bill of export. See, form presented to proper officer to let the goods export is called what? Bill of export. Then bill of entry. What is called bill of entry? Then again, if already the goods are imported, they are in the port premises. So once the goods are imported, they'll be unloaded and kept in the port premises. Then you need to collect your goods. You need to take it to your factory or premises, right? So to hand over the goods to you, you need to again submit a form. Such form is called as what? Bill of entry. Bill of entry. Bill of entry is related to import. Bill of export, export related. Okay. So the other name is also there, sir, for bill of export. Okay. We call it as even shipping bill also. Bill of export, or even it could be called as what? Shipping bill also. Shipping bill. Okay. Then the procedure for import. Sir, understand, sir, we are discussing about now the procedure for import. Step by step, sir. First thing, a vessel or an aircraft carrying goods and passengers is coming from outside India. It shouldn't be called for or shouldn't be landed at any place other than customs port. Okay, just like as a bike or car, you cannot stop it wherever you want. Okay, just because the nature is good, you cannot stop it wherever you want and then you can go there. Okay, you can have a cup of tea and then you can go. All this is not possible. A vessel or aircraft coming from outside India should be landed or called for only in the customs port. Okay, done. Only in customs port it will land for. Sir, emergency situations, that's an exception, guys. Normal cases. Then the person in charge. Who is called person in charge, sir? Next page, sir, if you see, there's something called person in charge. Who is called person in charge? For vessel, master of the ship. For aircraft, commander or pilot in charge. For train, conductor or guard. For any other vehicle, driver. For vessel, master. For aircraft, commander or pilot in charge. For train, conductor or guard. For any other vehicle, driver. Okay, this is the person in charge. Okay, what this person in charge has to do? This person in charge has to deliver an import report or import manifest. Import report or import manifest. It consists of the details of goods, passengers which are being carried in that ship. Okay, so this has to be submitted to the customs office before the arrival of the vessel. Okay, you are a person in charge. What do you have to do? You need to submit import report or import manifest to the customs office before the arrival of the vessel. Okay, what will be there in this import report? The goods details, passengers details. Okay, done, submitted. Then what customs office has to do? Customs office will verify whether this, okay, whether the goods which are there in the ship, the passengers who are there in the ship, are they allowed to come? Are there any prohibited goods out of those goods? Okay, that preliminary study they'll do. If they feel like yes, nothing, okay, no problem with this, the ship can enter or the aircraft can enter, then they'll grant entry inwards. On receipt of IGM, proper officer will verify and grant what? Entry inwards. Okay, entry inwards also granted. Now what? The vessel can go into the port. The vessel can go into the port. But the proper officer, the goods shall be unloaded only under the supervision of customs officer. Okay, you cannot unload whatever the way you like. Only under the supervision of customs officer you should unload the goods. Okay, while unloading, first you will file import report. The goods which are mentioned in import report can only be unloaded. If they are not mentioned in import report, then such goods can't be unloaded. Okay, and the unloading shall be under the supervision of customs officer on a working day during the working hours. Okay, but this was in 1961, sir. 1962. At the time they brought Customs Act, they said like what? Okay, only working hours, on working day the goods shall be unloaded. It's a modern era, sir. These days the ships can't wait for such a time. Even we also can't wait. When our goods are lying in port, we want them immediately. Otherwise our production will stop here. So we want them immediately. So that's why we can't wait till a working day. So that's why, sir, now flexibility also there. What? In certain ports, 24/7 clearance is allowed. But working hours, they need not to pay extra charges. If they wanted to get unloaded, even in non-working hours also, then they need to pay extra charge called as merchant overtime charges. Merchant overtime charges. Okay, now where the goods will be kept? Sir, once the goods are unloaded, they'll remain in the custody of custodian. They'll remain in the custody of custodian. So now question is, who is this custodian? Who is this custodian? Let's see. Sir, this is the port. Okay, let's say this port is owned and managed by Adani Ports. Owned and managed by which? Adani Ports. Adani Ports. Then Adani Ports is called what? Adani Ports is called the custodian. Sir, ports does not belong to government. Yes. Okay, there may be some government controlled ports also, but majority of ports now are not controlled or managed by government. They belongs to private people only. Okay. Then what government will do, sir? Government will keep an office here. Okay, there will be customs office at one place. Okay, but whereas the overall port will be under the coverage of whom? Overall the port will be under the control of some other person who we call him as like what? Custodian. Whom we call him as like custodian. Understand, sir? Sir, then how this port custodian will get money, sir? Sir, from all the freight collected. From the freight collected by the ships. Or if in the case of aircraft, airport by the aircraft. In the freight collected, it's not just the freight. They'll include certain port charges also. Okay, that money will go to the port authorities. That money will go to the port authorities. So here Adani Ports is what? Custodian. Okay, once the goods are unloaded, the goods will remain in the custody of not government. In the custody of what? Custodian. Custodian means the one who owns or manages the port is called as what? Custodian. Once the goods are unloaded, they remain in the custody of custodian. Sir, okay, sir. My goods unloaded, they were in the port. The responsibility is now with the custodian. But when the goods are in the port, a small theft happened. What is called small theft? Let's say I imported mobiles. In a package, there are like 1,000 mobiles. Like that, I brought some 50 packets. Each packet will have 1,000 mobiles. Now, one packet has been opened, and in that some 2 or 3 mobiles has been taken away. Then that is a theft with small quantity. We call them as like pilferage. For such kind of pilferages, custodian, the port authority is only responsible. Once goods are unloaded, they remain in the custody of custodian. For pilferage, custodian is only responsible. Then, importer of goods. Sir, I imported goods. My goods are now with the custodian. I need to collect my goods now. For that, what I should do? I need to file a bill of entry. I need to file what? Bill of entry. Bill of entry is of two types. What are those? First one, sir. Sir, I want goods immediately, sir. I am waiting for the goods to come. I want goods immediately. Then I'll file a bill of entry, pay the applicable duties and taxes, and then I can take my goods and take it to my places. I can collect my goods and take it to my place. Right. Second one, sir. I don't want goods instantly, sir. Actually, I imported the goods because internationally the price is little cheap. So I imported now. I purchased and I imported it now. But actually, I don't have the need of goods now. Okay. So what I can do, I can keep the goods within the port premises only in a warehouse. So in that case, I can postpone the payment of customs duty. Postpone the payment of customs duty. That time I'll file another bill of entry. Okay. So what happens now? From the port area, the goods will be taken away to a warehouse and they'll be kept in the warehouse. In that case also I need to file bill of entry, but I'll not pay any customs duty. When I will pay customs duty, subsequently when I am reviewing goods from the warehouse, then I need to pay the customs duty. So understand, sir. When I imported goods and I want them immediately, I need to file a bill of entry and should pay the taxes. This is the normal way that we call it as like import of goods, bill of entry for home consumption. I'll pay taxes immediately and I'll take the goods. Bill of entry for home consumption. Second one, sir. I'll not take them immediately. I'll keep there only for some time because I don't want the goods immediately. So I need not to pay customs duty also. But I'll file bill of entry. I'll file a bill of entry and from there the goods will be kept in the transfer from the port to the warehouse and they'll be kept in the warehouse. When I should pay tax then? I have to pay the tax and duties only when I am removing from the warehouse. Okay, so based on my necessity, I'll file a bill of entry. Okay, so once bill of entry is filed, when the bill of entry has to be filed, sir, sometimes bill of entry can be filed even before the arrival of conveyance. Before now, I cannot file 1 year before the arrival of conveyance. I can maximum file before 30 days from the expected date of arrival. Once the conveyance is already arrived, then within next day to following day, I mean within 2 days, okay, only if they are working days, I need to file the bill of entry. Then, sir, if I am delaying filing bill of entry, I can't do that, sir. Maximum from the date of unloading, I can keep my goods in the port only for 30 days. If I didn't clear the goods by filing bill of entry, either for home consumption or for warehousing within 30 days, then the port authorities, the custodian will be levying demurrage charges, port demurrage charges. It's a penalty kind of for not clearing the goods. Within 30 days from unloading, goods has to be cleared for warehousing, home consumption or for transshipment. Post 30 days, custodian will levy demurrage charges. So now quickly, sir, close your eyes and try to understand or keep the flow of import procedures. So first one, any vessel or aircraft coming from outside India shall not be landed or called for at any place other than customs port. Okay, it's coming directly to the port. But before arrival, the person in charge has to file an import report. What it contains, the goods and passenger details. Now customs authorities will verify them. If they feel everything is okay, then they'll grant entry inwards. Once entry inwards is granted, then the aircraft or vessel will be sent for unloading. Okay, will go to the port. Then the goods which are only mentioned in import report are allowed to be unloaded. That also under the supervision of customs officer on a working day, working hour. But however, exception is there. Nowadays 24/7 clearance is there. But you need to pay some extra charges, merchant overtime charges. Once the goods are unloaded, they remain in the custody of custodian. If any small quantity theft called as pilferage is happened, okay, sir, they are under the control of custodian, sir. If theft is happened there, custodian is only responsible. For pilferages, custodian is only responsible. On them, if any tax needs to be paid, custodian only has to pay. Then, you being an importer or we being an importer, what is our job? We need to file a bill of entry and collect our goods. So the bill of entry here is of 3 types. First one, bill of entry for home consumption. That means I'll file bill of entry, pay the applicable duties and taxes and collect my goods. Done. Second one, bill of entry for warehousing. In this case, I'll not take my goods immediately. I'll file a bill of entry from the port premises I'll transfer it to a warehouse and I'll keep them in the warehouse. That is for bill of entry for warehouse. Third, from the warehouse, if I want to take my goods, then I need to file another bill of entry for removal of goods from warehousing. That time I need to pay again the duties or taxes applicable. Okay, so bill of entry can be filed before the arrival of the vessel within 30 days from arrival, whereas after arrival maximum 2 days, next day to the following day if they are working days. Then the goods unloaded can remain in the in the port for a maximum period of 30 days. Beyond within 30 days, I need to clear the goods either for home consumption or for warehouse. If not, then the demurrage charges are going to be levied. Okay, sir. Conveyance. The definition of conveyance, sir, it includes vessel, aircraft, vehicle. Okay. Charging section. What is the charging section of Customs Act, sir? The charging section of Customs Act is section 12. Whereas for GST, what is the charging section, sir? The charging section for GST is like section 9. Section 9. CGST Act. IGST Act na section 5. Okay. Charging section. What does it say? Sir, the role of charging section is like, it actually tells when the tax has to be levied under this act. So when customs duty can be levied, simple, the charging section says like, import or export of goods into India is the taxable event for levy of duty. What is the taxable event? Import or export of goods into India is the taxable event for levy of duty. So what rate I should check? What rate I should take? As per such rates mentioned in the Tariff Act. Okay. Sir, upper industries. In this case law, what happened? See, the Supreme Court said like, import is a process. Import is not a single step journey. Okay, once I step there, import completed, it's not like. Import is a process which commences when the goods cross territorial waters and continues till the goods get mixed or get form part of the normal local goods. Okay, when they become part of the mass of goods na, when they get mixed or when they get normal with the, when they get mixed with the normal goods or the local goods, till that point of time the import is continuing. Okay, let me tell you in another way, sir. Sir, what are the steps? Here, territorial waters, then unloading. Post unloading will be filing bill of entry. Post filing bill of entry, the goods will be cleared. Once the goods are cleared from customs place, they'll become like normal domestic goods only, na? So till the point they become like a normal good, the import is going on only. So import starts here. Import starts and it continues till the goods cross the customs barrier. So here the import ends. So import in another way, in a simple way, starts when the goods cross territorial waters and ends when the goods cross customs barriers and became part of the normal domestic goods. Till then, okay, till then import is continuing only. Then Abon Chilis Offshore Limited versus Union of India, another case law, sir. What does this case law say, sir? It's a specific case, sir. Sir, actually, here India is there. And then this dotted line, red color dotted line is there, na? Let us take it as like territorial waters. Territorial waters. And then I am drawing another line, sir. This one. Okay, this one. We'll take it as what? Exclusive economic zone. I mean customs waters. Now what? Here there's an oil rig. Okay, so they are extracting oil here, oil rig. Now the goods or the machines, plant and machinery directly brought to the oil rig. Whether it has to be treated as an import or not. Sir, as per the above case law, if you see, when charging section said like what? Import of goods or export of goods into India is the taxable event here. But the point is, in the previous case law, we discussed like import means a process when the goods cross territorial waters. Here in this case, the goods never cross territorial waters. The oil rig is in the exclusive economic zone. Directly the goods were brought to the exclusive economic zone and from there only they have been used. Now whether it has to be treated as an import or not. then it has been considered as a special case. And then here also Supreme Court said like what? Exclusive economic zones are deemed to be part of Indian territory. Therefore, supply of space equipments to the oil rigs located in exclusive economic zone by a ship will attract what? Import duty. Will attract import duty. Then, what is the date on which goods cross territorial waters? Not a taxable event. Already said, sir. Import ends when the goods crosses the customs barrier. So, import starts when the goods cross territorial waters. But you need to pay customs duty when? Like time of supply. Okay, in customs there is no separate chapter like time of supply. So that's why clearly what they are saying, like when the customs has to be paid. The customs has to be paid only when the goods are crossing customs barrier. Goods are crossing the customs barrier. See, when they cross territorial waters or enter into exclusive economic zone, no, not a taxable event. When they were unloaded, no, you need not to pay tax then also. When bill of entry filed, then also you need not to pay tax. But then when you have to pay the tax, you have to pay the tax when the goods cross the customs barrier. You have to pay the tax when goods cross the customs barrier. Okay, na sir? This is basic, sir. Then types of duties. Types of duties. Types of duties. Sir, types of duties, sir. Except productive duties, others we need not to discuss line by line, sir. So quickly you could understand here. First, duties can be classified into two types. Duties, two types. What are those two types? Protective, revenue duties. Revenue duties, protective duties. Revenue duties. What is the intention of revenue duties? The intention of revenue duties is to generate revenue. The intention itself is to generate revenue. Revenue duties. Protective duties. What is the intention of protective duties, sir? The intention of protective duties is to protect domestic industry. Is to protect domestic industry. Sir, if so many outside goods are coming into India at a cheaper price, which is less than the price that which our domestic industry can produce, then slowly our domestic industry will collapse. So to safeguard our domestic industry, certain protective duties will be levied. What are those protective duties, sir? First one, safeguard duty. Safeguard duty. Then there is something called anti-dumping duty, safeguard duty, and then there is something called anti-dumping duty. And the third one we are having is like safeguard duty, anti-dumping duty. And the third one we are having is like countervailing duty. Countervailing duty. Okay. And what about the revenue duties, sir? The revenue duties we are having, the first one is like BCD. BCD is like basic customs duty. BCD is what? Basic customs duty. What is the reason for levying this basic custom duty? Import or export. Import or export. Okay, let me finish off the discussion about BCD, sir. BCD, the reason is what? Import or export. Fine. Import or export. Usually the standard rate only applicable. Standard rate. But preferential rate is also applicable sometimes. Preferential rate also applicable. When preferential rate is applicable, when the goods are coming from goods from preferential area, goods originated from preferential area na, which is notified by central government. Preferential area means the area which is notified by central government. It is a preferential area, and such area is notified as preferential area by central government. The goods should have been manufactured in preferential area. Goods manufactured in preferential area. then the origin can be proved that they are actually coming from preferential area. If these four conditions are satisfied, instead of standard rate, preferential rate is applicable and a claim has to be made by importer. So government or the customs authorities will not identify themselves and provide you preferential rate. It's your job to check whether preferential rate is applicable or not. If preferential rate is applicable, then we need to ask. They will not provide by default. So claim for preferential rate. If all these are made, then preferential rate is applicable. Otherwise, the standard duty rate is only applicable. Okay. So what is relevant for exams here? Sir, they'll give two rates. So first I am writing about, sir, home consumption. I am writing about what? Home consumption. Home consumption. So home consumption, we need to check what? BCD rate. So which day BCD rate we should check? BCD rate, sometimes they'll give two different dates BCDs. Bill of entry one thing, date of bill of entry, or entry inward, date of bill of entry or entry inward. Out of these two, we should check whichever is later. On the latter day, whichever is the BCD rate applicable, such BCD rate we should take. This is when home consumption. At the time of home consumption, okay, you are directly, sir, what is home consumption? You will file bill of entry, pay taxes and directly take your goods to your place. Home consumption. Which BCD rate you should take? The BCD rate as on the date of filing bill of entry or the date of entry inwards. What is entry inwards? The proper officer has to file import report. Then customs people will verify and then they will grant what? Entry inwards. So out of these two, whichever is latter, such day, whatever is the customs duty rate applicable, such rate we need to take. Okay. When they are warehousing, so they are not home consuming, sir. Then they are warehousing. See, when the goods are being warehoused, then two bill of entries will be there. Bill of entry for warehousing and there will be even for bill of entry for removal. Two bill of entries will be there. Okay. Sir, simple thing, sir, remember. Sir, when you are warehousing goods, are you paying duty? No, right? You are saying like, without payment of duty, I'll keep my goods in warehouse. Whenever I remove my goods from warehouse, that time I'll pay customs duty. Say, you are making a mother promise. But government will not trust your mother promise now. That's why what they are asking now, they are asking you to execute a bond. Okay. At the time of submitting bill of entry for warehousing. Understand? So now tell me, sir, this time when you are executing bill of entry and sending the goods into warehouse, the goods are going in. So that's why it's called what? In-bond bill of entry also. The other name is like in-bond bill of entry. But when you are removing, the goods are being what? Exit from the warehouse. Exiting. So X. So here the bond will be given back to you. That's why X-bond bill of entry. So two types of bill of entries are there. In-bond bill of entry is there and even X-bond bill of entry is also there. Okay. So out of these, sir, this X-bond bill of entry is there now. This is relevant for BCD rate. This is on this day, whatever is the BCD rate we should take. Sir, very important points, sir, for questions also, these 2 points. So remember, for home consumption, if it is home consumption, which BCD rate we should take? Bill of entry. Only one bill of entry will be there if it is home consumption. Bill of entry date of filing bill of entry, or entry inwards. Out of these two, whichever is latter. If there is warehousing, then what to take? Straight away, sir. Bill of date of X-bond bill of entry, customs duty rate. Date of X-bond bill of entry, BCD rate. This date you should take. Okay. Then exchange rates. The next one we need to check is about exchange rates. The next one we need to check is about what? Exchange rates. So which exchange rate we should take? Sir, exchange rates, why they are relevant now? Sir, in import cases, the goods are coming from outside India. So they may be denominated in foreign currencies. Okay, the values may be in foreign currency. So you need to convert them into Indian currency. So what exchange rates you should take? Exchange rates given by CBIC. Given by CBIC. Okay. Then also, what if in the case of home consumption, which exchange rate we should take? In case of warehousing, which we should take? Home consumption. We should take exchange rate as on bill of entry. As on bill of entry. Sir, many confuse here. For BCD rate, we should take bill of entry or entry inward, whichever is latter. For exchange rate, straight away you should take what? The rate as on bill of entry. Okay, so people will get confused, and what they'll do now? For exchange rate also they'll take whichever is latter. No. Exchange rate na straight away the rate as on the date of bill of entry. For BCD rate only you should take whichever is latter, entry inward or bill of entry, whichever is latter. If at all the goods are warehoused, then you should take, sir, warehousing. Two bill of entries are there. One is at the time of sending goods to warehouse. One is at the time of removal of goods from warehouse. Inbound bill of entry, ex-bound bill of entry. Okay. So which is important here? The exchange rate as on inbound bill of entry. As on inbound bill of entry. So for warehousing, tax rate as on ex-bound bill of entry. Exchange rate as on inbound bill of entry. These are the relevant things. Okay, so this is things you need to learn about the BCD. Okay, sir, in income tax, the amount on which we levy tax is called total income. In GST, on which we levy tax is called value of supply. In customs, the amount on which we levy tax is called as assessable value. Assessable value. Okay, so this is the taxable value. This is the taxable value, assessable value. Okay, on this assessable value, first we should levy BCD. Rate will be given in the question. Sometimes two rates will be given. When two rates are given, depending on the question, you should check if it is related to home consumption, bill of entry or entry inwards, whichever is latter. Such day related BCD rate you should take. BCD will apply on assessable value. You will get an amount. Okay, done. Then the next one is like SWS. SWS means what? Social welfare surcharge. SWS means what? Social welfare surcharge. It is leviable only on imports. Social welfare surcharge is leviable only on imports. Only on imports. That also on what rates are? Usually it is like 10% on BCD. 10% on BCD. 10% on BCD. So social welfare surcharge we need to levy mandatorily, sir. In question they will not ask to calculate social welfare surcharge. But still you need to levy SWS at a rate of 10% on BCD. 10% on BCD. Okay, sir. BCD is there. Social welfare surcharge is also there. Okay. Actually, sir, before this, there is something called AIDC. AIDC means what? Agriculture Infrastructure Development Cess. Agricultural Infrastructure Development Cess. So it is a cess levied to generate more revenue to the government, which is such revenue is used only for agricultural infrastructure development cess. This agricultural development cess, if it is there, it is also leviable on assessable value only. Now SWS has to be levied on 10% on BCD plus AIDC. BCD plus AIDC. But for our example, mostly will not see AIDC. Mostly will not see AIDC in any question, exam question. If at all AADC is there, remember, first we should levy BCD, same on assessable value. AADC is also on assessable value. Then you should add BCD and AADC on together. You should levy social welfare surcharge. Social welfare surcharge. Then there is CVD, which is equivalent of excise duty. Equivalent of excise duty. But we all know, sir, currently there is no excise duty. Excise duty is subsumed into GST. Okay, excise duty is subsumed into GST. Excise duty is subsumed into GST. So then why we are talking about CVD? Sir, even though excise duty is subsumed into GST, petrol is still out of the ambit of GST. Alcoholic liquor still out of the ambit of GST. So on them, okay, not on alcohol, petroleum products, still excise duty is there, and on tobacco products. Okay, that's why when you import petroleum and tobacco products, there will be CVD on what? On total of BCD plus AADC plus SWS. On this total, you levy CVD. And there will be something called special CVD. Special CVD is what? Equivalent of VAT. Equivalent of VAT. Sir, whether it is there? No. VAT also subsumed into GST. Sir, then again, why, sir? Sir, again, same thing. Petroleum products are not into GST, na? Alcohol is not into GST, na? So, VAT is still continuing on them. So, if any import of petroleum products or alcohol is there, then special CVD will be levied. Okay, on what, sir? Special CVD will be levied on BCD plus all the taxes you should add. SWS plus CVD. If you add all this, even AADC. On this total, you should levy what? Special CVD. On this total, you should levy special CVD. Okay. And one important point is like special CVD is restricted to a maximum of 4%. Is restricted to a maximum of 4%. Okay. So once again, sir, for everybody to have clarity, first we'll take what? Assessable value. Assessable value. On assessable value, what we should levy? BCD. BCD has to be levied on assessable value. Then AADC, Agricultural Infrastructure Development Cess. That also has to be levied on what? Assessable value. Then we should levy what? Social welfare surcharge at a rate of 10% on what? BCD plus AADC together. Okay. Then there could be CVD. What is CVD? CVD is like equivalent of excise duty. But currently, not there on every product, only on petroleum products it is there, and tobacco products. Okay, it has to be levied on what? Assessable value plus BCD plus AADC plus SWS. On this total, will be levying the CVD. Then special CVD. Special CVD is what? Equivalent of VAT. How much the maximum special CVD can be levied? The maximum special CVD that can be levied is only 4%. On what it has to be levied? Assessable value plus BCD plus AIDC plus SWS plus even CVD also you should add. Then you will get these things. Okay, done. Then you need to do subtotal. You need to do subtotal. I mean, you are adding all of this. Then on this, again you will be levying IGST. You will be levying IGST. Sir, why I should levy IGST, sir? Why not CGST and SGST? Sir, import is an interstate. Import means it's an interstate supply. Sir, where it is said? Sir, it is said in section 7 of IGST Act. It is clearly defined like import has to be treated as an interstate supply. So that's why we need to levy what? IGST. Then sometimes there could be even GST. Okay, on what IGST? IGST on this subtotal. And then sometimes there will be even GST compensation cess. Then even this GST compensation cess also has to be levied on subtotal. Okay, this way. So now you add all the taxes except assessable value. You will get the total customs duty payable. You will get total customs duty payable. Sir, everybody, are you able to follow? Respond. Something yes or no? I hope guys are understanding. Everything is going on track, right? Okay, done. Then, sir, now whatever we are discussed is about revenue duties only. But we have protective duties. So let me write down about protective duty, safeguard duty. So what is safeguard duty? When safeguard duty will be levied. So understand, safeguard duty is product specific. Product specific. What does it mean by product specific? From wherever the country this product comes, safeguard duty is leviable. Once safeguard duty is there on such product, then from whichever the country it comes, we have to levy safeguard duty. Let's say on mobile, safeguard duty is there. Now from mobile, whether it is whichever the country it comes, we need to levy what? Safeguard duty. It's not based on the country it is coming. It's based on the product. That's why we call it as what? Product specific. So when can we levy safeguard duty? On an inquiry or investigation. Okay. What is found? That it is found like there are increased imports. There are what? Increased imports. And such increased imports are causing and threatening to cause serious damage or injury, causing or threatening to cause serious damage or injury to domestic industry. To what? Domestic industry. Increased imports, and such increased imports are causing or threatening to cause serious damage or injury to the domestic industry, then we can levy safeguard duty. Safeguard duty. So certain mobiles, sir, India is also manufacturing, but there are so many mobiles coming from outside India. There are that many mobiles, if they are coming now, they are, because of this intensive competition, they are selling for very low price. Indian industry cannot survive. That's why, to control them, to increase their prices compared to our domestic mobiles, we are levying some safeguard duty on them. Okay, understand? Okay. Provisional safeguard duty also can be levied. Okay, let me take it here, sir. Directly to the safeguard duty. Provisional safeguard duty also can be levied. Once safeguard duty is brought, it shall be in force for 4 years and can be extended up to 10 years also. Central government can levy provisional safeguard duty. Sometimes they can even levy provisional safeguard duty on the basis of preliminary investigation. They cannot conclude how much loss is going to happen. That's why some preliminary safeguard duty or provisional safeguard duty is levied. But on final determination, if the safeguard duty paid provisionally is less, on final determination, the safeguard duty paid on provisionally is less, then you need to pay the difference along with interest. If at all the safeguard duty you paid provisionally is only more, then you need not to, then the excess you paid will be refunded. A provisional safeguard duty will remain in force for 200 days. Will remain in force for how many days? 200 days. So safeguard duty is not imposed. When safeguard duty is not imposed, when articles are imported by 100% EOU or SEZ. When the articles are imported by a 100% export oriented undertaking or SEZ, then we need not to levy safeguard duty. Then next. Sir, example, sir, mobiles are coming from developing countries, and developed countries. From both there are like imports. These imports are like very high. Because of this, our domestic industry is affecting. So to control that, we are levying what? Safeguard duty. But the point is, developing countries, sir, these are like now only progressive. So we need to give little extra advantage to the developing countries. Developed countries now already developed, they have money. Okay, so we need not to encourage them. But developing countries, we shouldn't be so harsh regarding the developing countries. That's why what they said. But developing countries, when their total share of imports, sorry, when the share of imports of developing country, share of import of which country? Developing country is less than 3% or equal to 3% of total. The share of imports of that particular product from a single developing country is less than 3% of total imports. Then safeguard duty is not leviable. Not leviable. Look at these examples. Sir, there are developing countries here, A, B, C, D, E. The others are like developed. The others are like what? Developed countries. Okay. What is the value of imports are here? 20 crores, 25 crores, 20 crores, 15, 20, and from developed countries, 900 crores. Sir, on developed countries, no doubt, safeguard duty is leviable on developed countries import. But whereas on developing countries, see, 20 crores are here from country A, 20 crores. So if it is 20 crores now, what is the share of import from total 1000 crores? Out of them, 20 not 2%. Country B 25, that means 2.5. C 20, 2%. D 50, that means 1.5. E 20 crores, that means 2%. If you see, there are 5 developing countries. From all these developing countries, the share of import is within 3%. So no safeguard duty. No safeguard duty. Fine. But if you look at the second point, sir, what is the second point says? Individually, even though less than 3%, check aggregate. If aggregate it is more than 9%, then safeguard duty applicable on all those countries. Individually, even though less than 3%, if aggregately more than 9%, then safeguard duty is applicable. So if you look at here, individually within 3% only, but you do total 10%. So on all the countries, safeguard duty is applicable. So individually should be within 3%, aggregately should be within 9%. Then safeguard duty is not applicable. So look at scenario 2. From country A 35, country B 10 crores, country C 15, country D 25, country E 15. So overall it is how much, sir? 1000 crores. Overall it is how much? 1000 crores. So if you look at here, what is the percentage? From country A 35 crores out of 1000 crores. That means 3.5. 3.5. More than 3%. So safeguard duty is what? Applicable. Whereas on other countries, 10 crores, 1% only, 15 crores, 1.5, 25 crores, 2.5, 15 crores, 1.5. Okay, sir. Sir, now we need to check again aggregate na. Sir, while aggregating, remember, if any individual country share is more than 3%, such share shall not be included in aggregate. So while aggregating, you should check only the country shares which are within 3%. So here it is already more than 3% na country A. So don't count it for aggregate. Rest all. If you count all these, how much, sir? Sorry. If you count all these, how much, sir? 6.5, which is less than 9%. So safeguard duty is not applicable. Okay. So to make it simple, sir, safeguard duty is applicable when there are increased imports and such increased imports are causing or threatening to cause damage or injury to the domestic industry. Point number 1. Second one, it will be in force for 4 years and can be extended up to 10 years. Provisionally also safeguard duty can be levied, which will be there for a period of 200 days. Then safeguard is not applicable, SGD is not applicable when the imports are made by 100% export oriented undertaking or SEZ. And it is not applicable when the individual country share of imports are within 3%, developing country, and aggregately they are within 9%. Done, sir? Everybody understood what is called safeguard duty? Everybody understood what is called safeguard duty? Okay. Then we are moving on to anti-dumping duty. We are moving on to anti-dumping duty. What is called dumping? Sir, dumping means, let's say, sir, the product price in China, they will sell it for the selling price they sell for equivalent of Indian 40,000 rupees they'll sell in China. The same unit, same exported to India for 30,000 only. Exported to India for 30,000 only. See, in their country, they'll sell it for 40,000. But whereas to India, they'll sell it for only 30,000. They'll sell it only for 30,000. In that case, what they are doing, they're selling it for a price less than normal price. They're selling it for a price less than normal price. And they're selling at a price less than normal price, then anti-dumping duty has to be levied. Okay, so nothing but they are dumping goods into India. Okay, selling price 40,000 are in their country. In India, they are sending for only 30,000. So for cheaply they are sending to India. Why? They want to collapse Indian market. So that's called dumping. For a price lower than the price in their country, if they are exporting to India, that is called dumping. To control dumping, will levy anti-dumping duty. What is how much are anti-dumping duty? Anti-dumping duty is like country specific, not product specific. Let's say on mobile only anti-dumping duty levied. Will not levy anti-dumping duty on every mobile coming from any country. Let's say if China is doing dumping, then only from mobiles coming from China will levy anti-dumping duty. So that's why it is called what? Country specific. Whichever country is doing dumping, only on such country will levy anti-dumping duty. Okay, it's a country specific, will be in force for 5 years, can be extended for another 5 years, I mean overall up to 10 years. It also can be provisionally levied, and even it could be levied retrospective also for a period up to 90 days, for a period prior to 90 days. So anti-dumping duty, sir. First we need to find out margin of dumping. We need to find out margin of dumping. What is margin of dumping, sir? We have normal value minus export price. Normal value means the price at which they sell in their country. In our example, 40,000. Or export price. Okay, normal value minus export price we want. Export price. What is the export price, sir? We took 30,000. So if you subtract 40,000 minus 30,000, this 10,000 is called as what? Margin of dumping. Then we want what? Injury margin. What is injury margin, sir? Injury margin means the price at which if you import, there will not be any impact to the domestic industry. Okay, sir, if it gets at 30,000, then it's a problem to the domestic industry. Domestic industry cannot sell at 30,000. Okay, so now see, domestic manufacturer selling price. Okay, you should compare what? Domestic manufacturer selling price. Let's say we'll take it as like 38,000 minus import price, not export price, import price. So what is difference between export price and import price? The import price is nothing but export price plus freight plus insurance plus BCD and SDWs also. Then it is called import price. To the export price, we should even add freight insurance, because export na FOB, okay, we should add freight and insurance, because from that country to India it should come na. China price, export price, they are selling from China at 30,000, but the good to reach India, we need to pay freight and insurance na, that also add. BCD and SWs in India also you add, then we'll get what? Import price. Let's say, sir, 30,000 plus freight 1000, insurance 200, BCD 500, SWS 50. So if you add all this, how much? 31,750. So this is what import price. Now this difference is called injury margin. This difference is called injury margin. Why? Sir, sending to India at 30,000, yes, Indian market will collapse. That doesn't mean we need to sell here at 40. If at least they sell at 38,000 also fine, because domestically also our manufacturer selling at 38,000, this fellow also will sell at 38,000, no problem. So that's why injury margin is what difference between the domestic manufacturer selling price and the import price. How much, sir? It is like, okay, 6,250. So what is anti-dumping duty? The lower of dumping margin or injury margin. So 6,250 is the anti-dumping duty here. Questions will be little different, sir, but fine. Then countervailing duty. What is countervailing duty? Countervailing duty is levied if the articles imported into India are with a subsidy. Sir, let's say they are coming from Bangladesh. Now Bangladesh government is giving subsidies to their manufacturers. Okay, to encourage their exporters, the Bangladesh government is giving subsidies. So because they are getting subsidies, they can send or export to India, okay, at a cheaper price. So now to counter such subsidies, will be levying countervailing duty. Duty levied if the articles imported into India by getting subsidies from another country, the amount of CVD shall not exceed the amount of subsidy paid. CVD and anti-dumping duty cannot be levied simultaneously. On a same good, you can't levy both, either anti-dumping duty or CVD. Okay, CVD also can be levied on provisional basis. It will be in their force for 5 years and extendable for another 5 years. Extendable for another 5 years. Okay, then so before this chapter is completed, sir, the basics and types of duties. Let me show you. First, we'll take assessable value. When or at what place this protective duties we need to show. Sir, I'm not considering AIDC, sir, because AIDC will not come frequently, so I'm not considering. Then CVD, special CVD also, if they come also, they'll come for MCQs only, not for the problem. So I'm ignoring this point, sir, and now doing the point. Okay, accessible value. First, we should levy what? BCD. Then SWS at a rate of 10% on BCD. Okay, then we should levy what? Protective duties. We should levy protective duties. What are the protective duties? It could be safeguard duty, it could be anti-dumping duty, safeguard duty, anti-dumping duty, and even there could be safeguard duty, countervailing duty also. Okay, now after adding all these, we do subtotal. On this subtotal, we need to levy IGST and even GST compensation cess. Sir, cess also has to be levied on what? Subtotal only, not on IGST, on subtotal only. Okay, so this is how we calculate the taxes here or the duties here. Understand, sir? So there is a question, sir, from workbook. I think only one question, sir, that would be there. Anti-dumping duty. That anti-dumping duty question alone will solve. Then we can move on to the customs valuation. So 1 second, sir. I'll have a glass of water and then I'll be back. you need a break now, then I'll give it like somewhere like 5:45 something. That time I'll give some 5 minutes or 10 minutes break. 3 to 7 we can keep like some 5 minutes or 10 minutes break. It's okay. So customs valuation, sir. Sir, we'll discuss the definition part and all later. First, here, what we discussed in the previous chapter is like, if there is an assessable value on this duty calculation we learned. This chapter, customs valuation, will helps us in finding out this assessable value. Okay, it's like similar to the value of supply chapter in GST. Value of supply chapter in GST, the similar kind of chapter. Okay, we'll be finding out the customs valuation here. Okay, we'll do what is the assessable value and what value we need to do. We need to calculate customs duty, right? See. So there are customs rules, sir. Rule 1 is about customs import goods valuation rules. Rule 2 is about definitions. Whenever we need it, we'll discuss. Then rule 3, rule 1 title, sir. Rule 2 definition, sir. What is the title? Customs imported goods valuation rules. Rule 3. What does rule 3 say? Rule 3 is only important for us. Rule 3 says like, transaction value can be taken as transaction value of import goods can be taken as assessable value. Transaction value. What is called transaction value? Transaction value is nothing but the price traded, the price that has been agreed between those two parties, importer and exporter, the seller and the buyer, can be accepted as assessable value. But for that, there are certain conditions to be satisfied. What are those conditions to be satisfied to take transaction value as assessable value? First one, seller and buyer. Seller and buyer. For buyer na here importer, because buyer will be in India na, buyer is what? Importer. Whereas the seller outside India, he is exporting from his point of view. So he is what? Exporter. The seller and the buyer are not related. The conditions to take transaction value as assessable value is like, the seller and buyer are not related. Second one, consideration is in money or can find the money value, monetary value, can find the monetary value. But it's not like it should be only in money. It can be even in non-monetary form also. But for that you can find out the monetary value. Let's say they paid consideration in the form of gold. No problem. For gold we can find out monetary value na, that you can take it as assessable value. But if they paid consideration in such a way, for that you can't find out monetary value also. Charities are. It's a charity thing. That's why you sold it for only 5 rupees. Now, for the compromise you made for charity, we can't find out what is the monetary value. Okay? That's why if the consideration is in non-monetary terms and you can't find out monetary value, then you can't take assessable value. Sorry, transaction value as the assessable value. Third one. Seller shall not impose conditions. Seller shall not impose conditions over exported goods. Shall not impose any conditions on the export goods. Sir, you already purchased goods. Then you are the owner of those goods. You being the buyer or the owner of the goods. Who is that seller to put conditions on you? If he is putting certain conditions on you, then we don't accept transaction value as assessable value. Seller not to impose conditions on goods imported. Who is seller to impose conditions? Sir, I went to a shop, I purchased a chips packet. Okay, potato chips I purchased. Then the seller is saying me like, you should eat here only. You should stand and eat here only. You should eat it with only cool drinks only. But one person here wants to eat it with Shahil wants to eat it with some other beverages. Okay, as stuff or something. Okay, then the seller is saying like you should not eat it like that. You should eat it only here only. Then what he'll do? He obviously throw the lace packet on you and says like, who are you to put such conditions? I'll eat whatever the way I want. I'll stand and eat. I'll sleep and eat. I'll mix it with water and eat. So who are you to say all this, right? So but seller is putting some conditions. Let's say 10 rupees chips packet. The seller is giving only for 2 rupees and then asking to eat here only. Then what do you think? Anyhow, he is giving for 2 rupees only. So okay, we'll eat it here only. Understand? So when seller is imposing conditions, then if generally buyer accepting means there might be price compromise. That's why we don't take transaction value as assessable value. So 3 points to be satisfied. They shouldn't be related, buyer and seller. That money should be the consideration. Non-monetary also fine. But money value can be exercised or can be found out. Third one, seller shall not impose any conditions on the goods imported. Fourth one, sale proceeds of buyer. Sir, I imported goods, sir. Subsequently, I am selling. I imported goods. I purchased goods. And I am subsequently selling. What are the money comes? That's to me. That belongs to me only, right? But here, sale proceeds of buyer are shared with exporter. Sale profits of buyer are going to be shared with exporter. So let's say, look at this example, sir. Importer. His import price is 400. And then he's selling again them for 700 rupees. Now, what he is doing? First, importer paid to the exporter 400. First he sent 400 plus on this 700 again some 10% is sending another 70. So how much is giving? Another 70 rupees is giving it to the exporter. So when the sale proceeds are going to be shared by the importer to the exporter, then you can't take transaction value as assessable value. Why? Simple reason, sir. Because the exporter not just getting 400, he's getting more than 400. So how can we take transaction value as the assessable value? He's getting more money. So the value of goods is not the transaction value. He's getting something beyond that. So you can't take it. But rule 10 comes and says like, rule 10. If the sale proceeds to be shared are clearly known, just like as here, that you know that you are going to sell it for 700 and subsequently you are going to give 70 rupees to the exporter. So when the sale proceeds are clearly known and how much you are going to share with the exporter also clearly known, then in such case, add that to the transaction value and take it as assessable value. Add that to the transaction value and take it as what? Assessable value. So here clearly known now. So don't take 400. Add that 70 also and take 470 as what? Assessable value. 470 as assessable value. Okay. So what does rule 3 say, sir? Take transaction value only as assessable value. 4 conditions to be satisfied. What are those? Seller and buyer are not related. Consideration should be in money and can't be find in the monetary value. Seller not to impose the conditions on the imported goods. Sale proceeds of buyer shall not be shared with the exporter. If he is going to share and it is clearly known at the time of import, then you take transaction value as assessable value only, but add this sale proceeds also. Okay, sir. Now, sir, now you need to understand certain terms, sir. First one, ex factory price. we need to understand certain times. What is ex factory price? Ex factory price means the price at the factory gate. The price at factory gate. That means me being a seller, I'll sell at my factory. You should come and collect the goods from my factory. So my responsibility is only till the factory. From factory, whatever the cost has to be incurred, transit insurance, or whatever it is, that's your responsibility only. Then the price which I am selling is what? Ex factory price. Then FOB. FOB means what? Free on board. FOB full form means what? Free on board. What does it mean? Okay, I'll bring the goods. Goods brought till port and boarded into conveyance. Goods brought till port and boarded into conveyance. Goods brought till port and boarded into conveyance. Then that is called free on board. First case, my responsibility is only till factory. Second case, I'm in Australia. You are buying from me. I said like, I'll bring the goods till the port in Australia, maybe Sydney port or Melbourne port. From my factory, I will only take the goods to the port. I'll load the goods in the ship also. Till then my responsibility. From there it's your responsibility. If those are the terms, then that is called as FOB. FOB. Then CAF. What is CAF? CAF value means cost, insurance, freight. Cost, insurance, freight. What does it mean? This is the price when goods imported into India. When the goods imported into India. When the goods were imported into India. So seller, I am saying like what? I will bring the goods till Indian port. From there you take. The seller from Australia, what I am saying? From my factory, I will bring them to port. I load them in the ship. And from ship also, okay, freight also I will only bear. I will hand over the goods to you in Indian port. Till then my responsibility only. Then that price is called what? CAF. CAF value. So this cost, insurance, freight, CAF value is there na? This is only called as assessable value. Assessable value. This is only has to be taken as what? Assessable value. Sir, in question they given already CF value. No problem. We'll take straight away as assessable value. But what if they given ex factory price? Then the ex factory price, you need to add all the other expenses and bring it till CF. If they given FOB, bring it till CF. Okay, so ex factory price they might have given in the question, but ultimately we need what? CAF value, because CAF value only has to be taken as assessable value as per rule 3. What? Transaction value I said na, the transaction value which they are referring is what? CAF value. So CAF value of a consignment in a import transaction can be taken as assessable value. On that we can levy customs duty. So we need which values are here? CAF value equals to assessable value. So now the point is like, how do we array CAF value? A very important, sir. Okay, I know we don't have much time afterwards. So here itself you should remember the format also. So please be attentive. Ex factory price means what? Price at factory gate. Price at factory gate. Yes, which country? Let's say we are in Australia na? In Australia, export country. From Australia they are exporting, right? And they are exporting from Australia to India, it is what? Import. So price at factory gate is the ex factory price. Then we need what? FOB. FOB is the price when goods loaded into conveyance. When goods loaded into conveyance. So from X factory price. So what is called X factory price? First, X factory price is cost plus margin. Their cost plus their profit, if they add, that is called X factory price. Now from X factory price to FOB, what we should add? We should add freight. Which freight? The freight which is incurred in export country, example Australia. So that freight we call it as local freight. Plus insurance incurred there in their country. Plus they might have paid any GST kind of taxes in Australia, then those local taxes. Then the goods are came till port, then the goods has to be loaded, right? So loading charges. And in Australia on export there might be customs duty, so you should add even customs also. So if you add all these, you will get FOB. So to the X factory price, we should add the freight in the export country, insurance in the export country, local taxes, loading charges, and even customs duty. If you add all these, then we'll be getting what? FOB. We'll be getting FOB. Then CF we should go now. But the point is, sir, the point is our customs authorities are saying like you need to check certain points are included or not, certain incidental expenses, incidental na, related to the transaction are included or not. If they are included, fine. If they are not included, you should include them. That FOB only we should consider. What are those? Then they are talking about Rule 10. Rule 10 talks about certain incidental expenses. When these incidental expenses are already included, no problem. Take that as FOB. If not included, then include. After including them, we'll be arriving what? FOB customs. FOB customs. Okay, so we should not take that straight away FOB. Rule 10 says like certain incidental expenses also has to be included. Then only it is called as what? FOB. Okay, as per customs. So Rule 10, what does it say? We should include certain things. What are those? First one, commission and brokerage we should add. If there is any commission and brokerage, we should add. So remember, the commission and brokerage might be paid in foreign currency or Indian currency. You should add. Commission and brokerage you should add, whether it is paid in Indian currency or foreign currency. Except buying commission. In question, if they referred it as buying commission, don't add, ignore. Any other commission and brokerage you should add. Any other commission and brokerage you should add. Paid in rupees or in foreign currency. Next one. Designing charges. Then we should add what? Designing charges. But when we should add designing charges should be added only when they are incurred outside India. When they were incurred in India, don't add. Designing charges incurred outside India, then add. Incurred in India, don't add. Then third one. Designing charges incurred where? Outside India. Then packing cost, add. Then include royalty and license fee. If any royalty and license fee is there which are conditioned to sale, all these if they are conditioned to sale, include. Okay na? Then fifth one, if there is free of cost material provided, free of cost any material provided by importer to exporter, add free of cost material. Then sixth one, sale proceeds to be shared. Sir, I said previously na, sale proceeds if they are going to be shared, we shall not take actually transaction value. But if they are clearly known, then you can take transaction value, but you should add them. So this point also says like we should add sale proceeds to be shared. And then seventh one, inspection charges. So all these 7 points if we add, then we get FOB customs. So understand X factory price, the price at the factory gate in the export country. FOB, when the goods are brought till the port and when they are loaded into the ship, that price is called FOB. How do we arrive to the ex-factory price? We should add the freight in export country, insurance in export country, freight in insurance, freight there, insurance in the country, insurance in that country, and then local taxes, loading charges, customs duty. All this what we should do? Add. Then we got what? FOB. Then to the FOB what we should do? We should add certain other points. As per rule 10, what are those? Commission and brokerage, designing charges, packing cost, royalty and license fee, free of cost material supplied, and sale proceeds to be shared, inspection charges. When these are added, we got FOB customs. Then to the FOB customs, we should add what? Freight. We should add what? Freight. We should add what? Freight. So what is freight now? So freight again is of two types. Whether the goods are coming in sea route or air route. You should check like sea freight or air freight. Sea freight, I mean they are coming in a vessel. Sea freight, given in the question, not given in the question. Same way air freight also, given in the question, not given in the question. Given in the question, not given in the question. So what we should do? Sea freight. Okay, sea freight, given in the question, take actual and add. Take and add. Not given, then take 20% of FOB customs. Then take what? 20% of FOB customs. Then air freight, not given. Then also take what? 20% of FOB customs. 20% of FOB customs. If they are given in the question, what to do? If they are given in the question, then you should take actual or 20% of FOB customs, whichever is lower. If they are given in the question also air freight, we should take what? Actual or 20% of FOB customs, whichever is lower. This is about what? Freight. Sea freight or air freight. Sea freight, given in the question, take actual. Not given in the question, take actual or 20% of FOB customs. Air freight, not given in the question, take 20% of FOB customs. If they are given in the question, take actual or 20% of FOB customs, whichever is lower. Then insurance. Insurance, sir, understand, for imported goods, insurance is mandatory. Okay, we cannot import goods without taking insurance. Okay, the transit through ship and all is risky and they are of high value. So insurance is must. Everybody will take insurance. So we should add insurance cost also. So insurance, given or not given. We should check whether they are given, not given. If they are given, take actual. If they are not given, take 1.125% of FOB customs. Then we should take what? 1.125%. %125% of FOB customs, right? Freight insurance. Then sometimes, sir, understand, sir, sometimes big ship carrying goods cannot enter the port because of it couldn't find a berth there. Okay, it couldn't find a berth there, place there. So this big ship may not come into the port. So when this big ship cannot come into the port, then they may use the small boats, to unload the goods. So the freight paid to the small boats, is called boat or light rate charges. That also we should add. The small boats is called what? Freight is nothing but light rate charges or barge charge. Okay, that light rate charges also what we should do? Add. We should do what? Add. Then demurrage. Demurrage is of two types. Demurrage is of two types. One is like ship demurrage. The second one is of port demurrage. Ship demurrage, port demurrage. Sir, ship demurrage, na, this is like for delay in unloading. Ship demurrage is for what? Delay in unloading. Whereas port demurrage is for delay in clearing in the port. Delay in clearing from the port. So in the port, when the goods are unloaded, we should clear them within 30 days. Within 30 days. When they are not cleared within 30 days, then there will be port demurrage. So ship demurrage, we should add. Port demurrage, what will do? Ignore. Port demurrage will do what? Ignore. So with this, we got all the points are here for the format which were required to solve a question. So let me write it in a format where. This format is very important. X factory price we should take. We should take what? X factory price. Then to the X factory price, first we need to arrive FOB. So to arrive FOB, what we should add? To the X factory price, we should add what first? Freight, local freight. Then we should add what? There are any local taxes like GST, if any are there in the export country. Then we should add the loading charges, if any, in the port. There will be there some mandatory loading charges plus the customs duty, if any. If you add all these, then we'll get what? FOB. Then to the FOB, we should do what adjustments? Rule 10 related adjustments. What are Rule 10 related adjustments? Are once again I am repeating, sir. Commission and brokerage. The first one is what? Commission and brokerage. You pay, you add whichever the currency it is paid. But you should ignore only when, if it is buying commission, ignore. Then designing charges. Designing charges, what we should do? All the designing charges we should include, except when they are incurred in India. Incurred outside India, include. Incurred in India, don't add. Then packing cost, you should add. Then we should add even what? Royalty and license fee, if they are conditioned to the sale. Then we'll add free of cost material, if anything, provided by buyer to the seller, I mean importer to the exporter. Then sale proceeds to be shared. The sale proceeds to be shared. And then the seventh point is like what, sir? The seventh point is nothing but inspection charges. Sir, it doesn't mean all these points will come in a question. Some of them will come in the question. So all these what we should do? Add. Then we'll get what? FOB customs. Then to the FOB customs, we should add what? We should add freight. Freight I already discussed. Sea freight, air freight. Sea freight given in the question, take actual. Not given in the question. Actual or 20% of FOB customs, whichever is lower. Actual or 20% of FOB customs, whichever is lower. Air freight, not given in the question. 20% of, sorry, 1 second, sir. Let me make it sure. I think I said something wrongly. Right. Sea freight given in the question. Sea freight given in the question. Take actual. Not given. Take 20% of FOB customs. Air freight. Not given in the question. Take 20% of FOB customs. Given in the question. Take actual or 20% of FOB customs, whichever is lower. Right. Plus. Insurance. How much we should take, sir? 1.125% of FOB customs. Then there may be boat charges or light rate charges. The small boats used to carry the merchandise from big ship to the port. Add. And if there is any ship demurrage also, add. Then we'll get what? CAF value. On this CAF value only, assessable value only, we need to levy BCD, SWS, all these things. Fine. Everybody understood now? So all this part only we discussed. Rule 1, Rule 2, Rule 3. All these conditions I have explained you. This X factory, FOB, all these things I explained. Commission, developing charges, packing cost, royalty, fee of cost, inspection, demurrage charges I explained. Freight I have explained everything in detail to you. Right? Okay, sir. Shall we proceed further? Sir, if you are okay, I'll tell, because this is the point which we are going to discuss now is of much important, sir. It requires your 100% attention. The point which I am going to tell now requires 100% of your attention. I cannot discuss this multiple times. Sir, look at this example, sir. Here, X factory price $10,000. Freight in USA $1,000. Loading charges $500, 11,500. Then designing charges are there $1,000. Packing cost is there $500. And the FOB customs is $13,000. And let's say freight is not given. Let's say freight is not given. When freight is not given, what we should do? When freight is not given, what we should do? We should take 20% of FOB customs, right? When freight is not given, we should take 20% of FOB customs. That means what? 20% of $13,000 equals to $2,600. 20% of $13,000 equals to $2,600. Right? We should take that straight away, freight. But there's a provisions are here which says, like, see this point, where freight is not given, then 20% of FOB has to be considered as freight. Right? Okay, everybody agree. Such freight 20% which we are taking is inclusive of transportation cost from port to factory to port in export country, loading and unloading charges in export country, loading and unloading charges in export country, and even the transportation charges from export country to port of importation. Okay, transportation cost from factory to port in export country, loading charges plus transportation from export country to port of importation. See, that means here we will take 20%. Now this 20%, of FOB customs, we till now think like just the freight. Freight from where to where? Let's say from Australia the goods are coming. So freight from Australia to India, we are taking what? This 20% as of now. But now they are saying like, no, that's not we should take. We should take what? This freight 20% of FOB customs means freight from Australia to India plus freight in Australia also, the local freight. You should add plus loading charges. All together is 20%. It's not just the freight from Australia to India, or if the goods are coming from Japan to India. No. Not that itself is 20%. This 20% includes the freight incurred in the export country from their factory to port, and the loading charges incurred there in the export country, plus the freight from export country to India. So all these together is 20%. Here they given freight in USA separately. How much? 1,000. Loading charges they given 500, and then we need even freight from USA to India. So all together it is like, all together the freight plus loading is 20%. That is 2600. So that means this 2600 already includes 1500. But we already added this 1500 na. So we should not add this separately. So we should subtract them and only 1100 we need to add. We should not add 2600 straight away. Okay. So the freight from US factory to US port and the loading here and US port to Indian port. All these three together we should take as 20%. But this 1500 already included now. So subtract 1500 and balance only add here. Sir, got this point everybody? Sir, everybody got this point? One second, sir, let me connect. Sir, before going into the problems, let me explain you even about the export related also. How the export procedure goes also. So the export procedures, how the export procedure goes now. An exporter has to present electronically the proper officer a shipping bill or bill of export. See, I'm an exporter. I want to export goods. So I need to submit a form to the customs office, bill of export. Bill of export will be presented when I am exporting goods through land route. When I am exporting goods through aircraft or vessel, then I will be presenting a shipping bill. Okay, when I am desirous to export goods, I'll submit a form called bill of export or shipping bill. Fine, submitted. Then once this is submitted, the proper officer is satisfied. Then that the goods are not prohibited and the applicable duties has been paid, then he'll give a let export order. He'll give what? Let export order. Sir, be clear. I'll submit a shipping bill, then he'll give me what? Let export order. Then the person in charge of the conveyance, sir, as an exporter, I should submit shipping bill and should get the let export order. Then the person in charge of the conveyance should submit that he wants to leave. So he'll be getting an entry outwards. Since he wants to go outside India, he should get an entry outwards. So when the entry outwards is granted to the ship or the conveyance, being an exporter, I got the let export order. Then the goods can be loaded into the conveyance. Okay. Then once the goods are loaded, post loading, the person in charge shall submit an export manifest to the PO. Sir, at the time of import, we will submit what? Import manifest. Now export manifest is leaving India. Goods are also loaded. Now finally, what goods are totally he is carrying? That report you need to submit to the customs office. And the customs office will verify it and give a written approval, written order. Only post that written order, the conveyance can depart. Sir, understand what is the export process? Exporter has to present electronically a shipping bill or bill of export. Okay, where the proper officer is satisfied that the goods are not prohibited and export duty is paid, then he'll get the let export order. Then the conveyance person also has to get a entry outwards. Conveyance guy got entry outwards. Being an exporter, I got let export order. If both these are available, then I can load my goods into the conveyance. Post loading the goods into conveyance, the person in charge has to again provide an export report, the complete picture of what goods are there, what goods are loaded, who are the crew, everything. Then again, the customs office will verify and give a written approval to him, so then he can leave the port. Okay. Sir, in case of exchange, what is the FOB value? Sir, if you see, in case of import, what I said is the customs assessable value, sir. Let me tell you. Sir, the assessable value in case of import is what? CAF value. Whereas assessable value in case of export is FOB value, free on board value. We should not take CAF, we will take FOB, because when we are exporting, our responsibility, our government wants the value at the time of export. When you are importing, government wants the value at the time of import. Import na the goods still reach India. That's why we are taking CAF value at the time of import. At the time of export, the valuation is based on FOB value. I hope you are getting my point. Okay. Sir, on export, what customs duty will be taken? The rate as on the date of let export order. BCD rate, sir. Sir, for import, which BCD rate will take? Bill of entry or entry inwards, whichever is later. Whereas for export, for import, will take what? Bill of entry or entry inwards, whichever is later, right? Import and home consumption. Whereas export, what we should take? The rate as on let export order. That rate you will take. Then exchange rate for export. For import, na exchange rate as on date of bill of entry. For export, exchange rate as on bill of export or shipping bill. I hope everybody understanding the point, sir. I am once again writing this point because many will get confused here only. Import, there is home consumption, there is warehousing, and there is again export. We want what? The tax rate on which day we should take, and exchange rate also which days we should take. Exchange rate always we should take which is given by CBAC. CBAC is Central Board of Indirect Taxes and Customs. For home consumption, which days tax rate? bill of entry or entry inwards. Out of these two, whichever is latter. For warehousing, now the tax rate has to be taken as on the date of ex bond bill of entry. Ex bond bill of entry. Whereas export, it is on the date of let export order. Date of let export order. Then exchange rate given by CBSE. In case of import home consumption, which days? As on the date of bill of entry. As on the date of bill of entry. Warehousing also bill of entry only, but inbound bill of entry. Then export. In case of export, we should take as on the date of bill of export, or it could be even called as shipping bill. That day, whatever is the exchange rate is available, that we should take. I hope everybody got clarity regarding this point, sir. So now I am going to the first question, sir. SP Limited has exported some goods to Mexico by air. The FOB price of the goods exported is $1 lakh. Okay, so we need what? FOB price only. Compute the value of export goods and export duty payable by S Limited with the help of the following. See, shipping bill, let export order. For exchange rate on which date? Shipping bill. Sir, in case of export, we want exchange rate as on the date of shipping bill. 17th June. What is the exchange rate of CBSE? 75. So we should take the FOB value 1 lakh into 75. How much is the assessable value in case of export? 75 lakhs. Then what is the BCD rate we should take? The BCD rate we should take is like as on the date of let export order. As on the date of let export order, what is the BCD rate? The BCD rate is 10%. So the customs duty payable is how much? 7,50,000. Sir, some people out with the flow, now we'll take social welfare surcharge also at a rate of 10%. Remember, again I am saying SWS is applicable only on imports, not on exports. Here the question is related to export, so SWS is not applicable. So the only duty is 7,50,000. 7,50,000. Okay, then question number 2. Sorry, question number 2 not needed, sir. 3 not needed. 4. 5th is an easy sum only. So 5th, 6th, I want something where everything is there, like the tax rates and all I am seeing, sir. I want even the duty calculation also. I'm searching for a sum where there will be even duty calculation also. If it's not there, then I'll show that sum only, and no problem there. Question number 24, sir. This one question, if we solve, we'll get the clarity regarding the whole points, because the valuation sums, everything remains same only, right? Look at the question. ABC Industries of Mumbai imported one machine through vessel from Japan. In the month of November, the following particulars are made available for computation of customs duty. Cost up to port of exportation incurred by the exporter. Cost up to where? Port of exportation. Then loading charges at the port of exportation. Freight charges from port of export to port of import in India. So if you add these two, you'll get what? FOB value. So let me solve for you, sir. They are giving what? Price at port. How much? 6 lakhs. Price at port, how much? 6 lakhs. For that, we should add what? Loading charges also. If we add loading charges also, how much are the loading charges? 25,000. If we add 25,000, then we'll get FOB as how much? 6,25,000 is the FOB. 6,25,000 is the FOB. Then freight, sir, this freight is from where to where? Port of export to port of import in India. So this we should add after FOB customs. Then designing charges. Designing charges necessary for the machine paid to consultancy firm in Delhi. Sir, designing charges we should add as per Rule 10. But when? Designing charges we should add only when they are incurred outside India. Designing charges we should add only when they are incurred outside India. So here will not add. Commission paid, whether in India or outside India, commission paid, what we should do? We should add. Commission paid, what we should do? We should add. Okay, so commission paid, what we should add. But if it is a buying commission, we should not add. So here it's not buying commission, we can add. But the problem is this is paid in local agent. So local agent, it might be paid in Indian currency. It might be paid in Indian currency. Okay, then actual landing charges. Sir, these landing charges we need not to add, sir. Landing charges we need not to add. Okay, landing charges we need not to add. Ignore. Insurance charges given in the question. Okay, not ascertainable. Then what we should take? 1.125% of FOB customs we should take. Then light rate charges paid at the port of importation. Light rate charges. What we should do, sir? Light rate charges we should add. Freight they given and light rate also we should add. Then we'll get. Okay, let me write down. We got what? FOB. For FOB, designing charges, shall we add designing charges? No, we shall not add designing charges. Nothing. Then we should add commission. But commission is paid in Indian currency. So first here also will convert into Indian currency. What is the Indian currency exchange rate, sir? The rate of exchange is like 0.71. So if you convert this 6,25,000 into 0.71, we'll get Indian value. How much is the Indian value, sir? 4,43,750. We got here 4,43,750. This is what? Rupees. Designing charges, nothing. Then commission we should add. How much is the commission? The commission is like 1,25,000. So we'll add 1,25,000. Okay, commission 1,25,000. Then anything else to add, sir, here? Nothing here, right? Okay, then we got what? FOB customs. FOB customs. So what is FOB customs, sir? 4,68,750 is the FOB customs. 4,68,000, sorry, not 4, 5,68,750 is the FOB customs. For that we should add what? Freight. What is the freight? Freight given in the question? Yes, given in the question. How much? 1 lakh. 1 lakh. Okay, freight given in the question is how much? 1 lakh. 1 lakh in which currency, sir? They given in their currency. So 1 lakh into 0.71. How much? 71,000 plus insurance. Insurance how much? 5,60,000, because not given in the question, sir. So 5,68,750 into 1.125%. How much we got insurance? If you calculate that one. If you calculate that one, it is like 6,398. 6,398. Then there is even boat charges or light rate charges also in the question. The light rate charges. How much is the light rate charge, sir? 20,000. Add. So if you add all these, we'll get the CAF value or even the assessable value. How much is the CAF value or assessable value, sir? 6,66,148. On this again we should levy what? We should levy BCD at a rate of how much? What is the BCD rate given in the question? 10%, which is like 60,000, 6,661. And SWS at a rate of 10%, which is 6,666. Then we'll have to do subtotal, because on subtotal only we should levy IGST. What is the total, sir? If you do 7,39,425. On this we should levy IGST. What is the rate of IGST? IGST has to be levied at a rate of 18%. IGST at a rate of 18%. How much is the IGST? 1,33,097. Okay. Now they'll ask what is the total customs duty payable. Total customs duty payable now it is like 66,661, 6,666 plus 1,33,97. If you add all these three, then we'll get the total customs duty payable. We'll get the total customs duty payable. Right. Then done, sir. Now I'm moving on to the next concept, sir. I'll show a question also on that concept first. If FOB customs is there, and freight is not there, then what will take? Freight equals to 20% of FOB customs. Yes or no? The same way FOB is available, insurance not available. Then we'll take what? Insurance equals to 1.125% of FOB customs. 1.125% of FOB customs. Then, so don't apply your max common sense and all. Okay, strictly follow whatever I say. FOB customs not available, but FOB customs plus freight available. FOB customs plus freight available. Insurance not available. Then how to take insurance? Because previously we said like what? If insurance not is available, you will take 1.125% of FOB customs. Here FOB customs also not available. Insurance also not available. But what is available is like FOB customs plus freight is available. In this case, insurance equals to 1.125% of FOB customs plus freight. Since individually FOB customs is not available now, so multiply 1.125% on FOB customs plus freight together. Okay, then next one. Again, FOB customs is not available, but FOB customs plus insurance is available. FOB customs plus insurance value is available. Freight is not available individually. Freight is not available. Sir, what we are taken? Where FOB customs is available, freight is not available. We are taking 20% of FOB customs as freight. But here FOB customs is also not there. What detail we are having is like FOB customs plus insurance together. So then take 20% on that. Then in that case, freight equals to 20% of FOB customs plus insurance. Freight is on what? 20% on FOB customs plus insurance. On the together value, what is the 20%? That only take it as what? Freight. Okay, this is a proviso to that mean rule. Actually, we'll take 20% of FOB customs or 1.125% of FOB customs. For that rule, there's a proviso. That proviso says like where individually insurance is not available, FOB customs is not available. What available is FOB customs plus freight. Then take 1.125% on the total also, no problem. Okay, here some people will apply sir logic like, sir, let us assume like FOB customs is 100, sir. Freight equals to 20, sir. That means total 120, na, sir. You are applying 1.125% now, only on 100 we should apply, na, sir. If we apply on total of FOB customs plus freight, na, it is mathematically wrong, na, sir. Yes, who is asking you mathematics here? Nobody is asking you mathematics here. So blindly follow whatever is the rule or provision said. What is the provision said here? If at all individually FOB customs is not there, but FOB customs plus freight is only there. Insurance don't know. Then insurance is 1.125 percentage of FOB customs plus freight together. If that combined total is only available. Same way, insurance is not available individually. FOB customs is also not, freight is also not available individually. FOB customs is also not available individually. What we have is the total of FOB customs plus insurance together. And on that only apply 20 percentage, no problem. Okay. Okay, so till here we have covered all the points. Now, rule 3. Rule 3 is done, sir. Okay, sir, on this also there's a question, sir. Let me show you that question, sir. Small questions only, but there's a chance sometimes they can be asked. See, question number 12. FOB value is there, but freight is not there, insurance is not there. Sir, here FOB value individually known, na? So no problem. Freight 20% on FOB. Done. Assessable value 1002. Next one. FOB plus insurance only available. Freight is also not known. And individually FOB customs is also not known. And what will take? FOB plus insurance charges is like 1010. On that only apply 20%. On that only apply 20%, which is 202. Which is 202. Okay, sir, first question. FOB customs individually there. So apply 20% on FOB customs only. Second question, FOB customs is not there individually. We have only the combined total of insurance plus FOB customs. Then also apply 20% on the total. This is said in the proviso. Okay, see. As per second proviso to rule 10 subsection 2 of customs valuation rules for imported goods. Next one. FOB value is there. Freight individually is there. Insurance not there. Take 1.125% of 1000, which is 11.25. Okay, next one. FOB plus freight is there, but insurance not there individually. And FOB also not there individually. So apply FOB plus freight into 1.125%. I mean 1060 into 1.125%. Okay, understood now, sir, everybody? Sir, many are asking about the break now. So we'll take break for 10 minutes, sir. Post break, quickly we'll finish off the valuation rules and we'll go to the baggage also. Okay. No problem, sir. We'll complete baggage also today. Maybe some 10 minutes, 15 minutes extra time if it takes also, we'll clear baggage also today. Okay. So take 10 minutes break and then we'll start with the session once again. So 5:52, sir. Again, I'll resume at 6:05. Resumes at 6:05 p.m. Okay, let us continue in valuation, sir. Sir, we have finished till rule 3, sir. So now, before going further, so let me quickly tell you what is called related persons here. Under customs, two persons shall be related if they are officers or directors of one another's business. Okay, A is acting as director of B Limited, B is acting as director of A Limited. So both are like officers and directors of one another's business. They are legally recognized partners when they are employer and employee. When one person holds greater than or equal to 5% of voting power, 5% of voting power, one of them directly or indirectly controls the other. Okay, both of them are being, sir, nothing but holding subsidiaries. More than 5% voting power itself are called as related persons. Holding subsidiaries, associates, and then they are like joint ventures, sub-subsidiaries, all these are covered under what? Related person definition. Okay, they are members of same family, and even when a person is acting as a sole agent or distributor of others, when a person is acting as a sole agent or distributor of others, then also they have to be treated as what? Related persons. Then also they have to be treated as related persons. Okay. Now what we need to discuss, sir, the point is, sir, rule 3, what rule 3 said? You can take transaction value, okay, provided the transaction value related CAF, you can take it as what? Assessable value with certain adjustments which was set under rule 10. Okay, but for this there are certain conditions. What are those? Seller and buyer should be what? Unrelated. Consideration or the price should be in money or could be expressible, even though in non-monetary no problem, could be found out or could be arrived in monetary terms. Then next one, seller shall not exercise control, seller shall have no control. Then sale proceeds not to be shared, sale proceeds not to be shared. If these 4 conditions are satisfied, then we'll take the transaction value as assessable value. If any of these conditions are not satisfied, then what to do? If any of these conditions are not satisfied, then what to do? Then we'll go to rule 4. We'll go to rule 4. Rule 4 talks about what? Identical goods. Identical goods. Identical goods means what? They look like same. Look like same and they do same functions. Then they are called as identical goods. Okay, I'll give a lot of examples, sir. Thumbs up versus Coke. Both look like same, perform same kind of functions. Then there's a Blue Star AC, Blue Star air conditioner versus some other AC, like let's say an LG AC or a Samsung AC, anything, a Samsung AC. Then a Hero Glamour versus Honda Shine. Both look like same and both have 4 gears. Then a laptop, let's say a Dell laptop and an Lenovo laptop. These are also called what? Identical goods. Okay, so what rule 4 says now, if actual good, actual imported good transaction value we can't take, that's why take identical good assessable value. If any identical good is imported at the same time, such identical good assessable value you take it as, such identical good transaction value you take it as what? Assessable value. Provided that should be from the same country from where the original good has been imported. Let's say I brought a good from Australia. Now identical good, if it is coming from Japan, I can't take it. It should also be coming from the same country. and possible same manufacturer. It's not mandatory, sir. If at all same manufacturer related good is also available, then give preference to the same manufacturers related. Possible same manufacturers. Same manufacturer. Okay. Sir, multiple identical goods are available. What to be taken? Lowest price at similar quantities. Sir, I have imported 800 kgs. So nearer to 800 kgs, whichever is the lowest price, that lowest price I have to take if there are multiple identical goods available. Multiple identical goods available. Okay, look at this question, no, provision, sir. So I'm going. Goods which are like same in all aspects, same in goods which are like same in all aspects, including physical quantity, and they are produced in the same country, if possible same manufacturer. If multiple goods are available, then lowest of such value has to be taken. Then let's say identical goods are not available. Then we go to rule 5. Rule 5 talks about similar goods. Similar goods means what? Similar goods now, they doesn't look like same. They doesn't look like same. But they perform same kind of functions, commercially interchangeable. Let's say, sir, I do Honda Shine and Activa. The Shine looks, the normal bikes, gear bikes looks like in one way, whereas these scooties, Activas look like another way. But commercially interchangeable. If you don't have a bike, obviously you are ready to take an Activa and go also, right? A ceiling fan and a table fan. Thumbs up and Sprite, that doesn't look like same, but they are commercially interchangeable and perform same kind of functions. So when they are not though alike, alikeness same in all aspects, but they have like characteristics and like components, they'll enable them to perform same kind of functions. Okay, then regard to the quantity, reputation and trademarks. So similar goods or of also should be originating from the same country from where the original goods has been imported. Okay. Sir, again, multiple similar goods are available. Then take whichever is the lower value. Whichever is the lower value. Let me show you a question on this, sir. Let me solve a question on this. Sir, this one. The consignment of 8th question, 800 metric tons of edible oil of Gulf origin was imported by a charitable organization in India for free distribution to below poverty line citizens in a backward area, and the scheme designed by the Food and Agricultural Organization. This being a special transaction, a nominal price of $10 per metric ton was charged for the consignment to cover the freight and insurance charges. The customs house found out that about the time of import of this gift consignment, there were following imports of edible oil of Malaysian origin. Sir, it is a charity related transaction. Since charity is involved, price is not the only consideration. The price they are paying now here $, per ton, that is not the consideration. They are giving it for charity. For that monetary value we can't ascertain. If that is the case, rule 3 is not possible. Then we'll go to rule 4. Rule 4 talks about what? Identical goods. Sir, when we are importing edible oil, the same time there are other edible oils also. So all these are what? Identical goods. If multiple identical goods are available, which should be taken? Whichever is lower. Now it's like 160. So we should take the transaction value as 160 for how many tons? 800 tons. So 800 tons into 160 if you do, okay, 800 tons into 160 and $1 equals to 63. If you multiply it, 80,64,000 is the assessable value. On that, apply BCD at a rate of 15% given in the question straight away. On that, SWS. So together the total customs duty payable is like 13,30,560. 13,30,560. Okay. Sir, look at this question number, sir. It's a case law where it said like, sir, the value of imported goods is increased if department fails to provide the importer evidence of import of identical goods at higher price. But actually the case is simple, sir. Okay, you can look at the decision also. We'll read down the decision also. Sir, actually the customs office said like they had a printout somewhere, and based on that they are saying like SSC imported at 1 lakh. But they are claiming like the same day there is some 1,50,000 value import also, same good. So they are stating like SSC didn't mention the price properly, so we wanted to take that 1,50,000. but that printout or that information is not given to the assessee. So can they do that? Can they increase that? Supreme Court held that mere existence of a computer printout was not proof of existence of comparable imports. Even if we assume that printout is there, that is true, such should have been supplied to the appellant, I mean to the assessee, and he should have been given a reasonable opportunity to explain why there is a difference. Thus, since there is no printout, and even though it is there not given to the assessee to give an explanation, so we cannot increase the value based on the comparable imports also, identical goods also. Then Rule 6. What is Rule 6, sir? Sir, Rule 6, sir, extraordinary job it says. Rule 3, take transaction value. Rule 4, accessible value is nothing but identical good value. Rule 5, accessible value is nothing but similar good value. Okay, you went to Rule 3, right? Okay, not possible. Rule 4, you went right? Okay, identical goods, not possible. Okay. Rule 5, you went? Yes, Rule 5 also check. Rule 5 also not suitable. Okay. And Rule 6 is thinking and saying that, okay, then go to Rule 7 and Rule 8. That's the job of Rule 6. Okay, Rule 6 says like, you already checked 3, 4, 5, those are not suitable to you. Okay, fine. Then go to Rule 7 and Rule 8. That's what Rule 6 is. Where the value of imported goods cannot be determined under Rule 3, 4, 5, then value has to be determined under Rule 7 or Rule 8. Rule 7, it is about deductive value method. Deductive value method. So what is deductive value method, sir? Sir, there is an imported good. Imported good, what will take? CAF value. CAF is nothing but what? Price at the time of import. Import. So this we need actually accessible value. But because those Rule 3 conditions are not satisfied, we can't take this CAF value as accessible value. But then this import good will be sold, right? So take that selling price of imported good. Sir, but selling price of that import good. Sir, if import good not available, then identical good selling price or similar good selling price. Okay, either the original imported good is sold, that selling price. Otherwise, the identical good is there, but identical good import value we can't take. But we sold identical good. So take the selling price of identical good or similar good and do backward computations. From selling price, you take it backward to the port, CAF value. So from CAF value to sell, to get the selling price, what will add? There will be customs duty. There will be customs duty, right? On accessible value, there will be customs duties add. Plus, from port, we need to transport, there will be transport charges from port. Transport and insurance to the port. Okay. Then, they'll add profit margin. Again, they want to sell, there will be their margin. And there will be selling and distribution expenses. Selling and distribution expenses. If you add all these, we'll get what? Selling price. Now in question itself, they'll give straight away selling price. You want CAF, then what you will do? From selling price, you will subtract. Sir, from CAF to selling price, now we'll add. From selling price to CAF, we need to go now, then what we should do? Subtract selling and distribution expenses, margin, transport and insurance, customs duty. Then you will get the CAF. The selling price could be of imported good selling price, or could be of identical good selling price, or even could be of similar good selling price. Could be even of what? Similar good selling price. Okay. Guru Prasad, I didn't check actually. I said them before the class starts, but I didn't check actually. Only after the class completion I can check with them. Okay. So backwards we are doing. So look at the points. Where the value, okay, take original imported good, identical good or similar good selling price. From there subtract profit included, selling expenses, cost of transportation and insurance, customs duty and other taxes. Then you will got what? Accessible value. Then the same point. Whether multiple identical goods or similar goods available, then take the price at which greatest aggregate quantity is sold. Greatest, I mean in aggregate highest number of units where it is sold, that value we should take. Sir, look at the point here. X Limited imported 500 units of mineral oils from high seas. Selling price is exclusive of duties and taxes. Freight 10,150, insurance 1,250. So straight away the given selling prices, sir. Nothing but this rule only, na? Okay. The selling prices are exclusive of duties and taxes. So we should not subtract duties and taxes. Freight, insurance, we should subtract. But here multiple prices are there, sir. 100, 90, 195, 105, 90. So which price we should take? The price at which greatest number of units are sold aggregately. So see, at 100 rupees, how many units are sold? Here, here, here. How many? 400, 150, 50. Total 600 units are sold. Then at 90, 300 and 350. How many units are sold? 650 units are sold. Okay. Then at a price of 95, how many units are sold? 500. Then at a price of 105, how many units are sold? 250 units. Now tell me, at what price highest number of units are sold? At the price 90, highest number of units are sold. So we should take which price? 90. How many goods actually we imported? 500. So you should do 500 into 90, which equals to 45,000. Okay, this is the selling price. We want CAF value. This is excluding taxes now, so don't subtract taxes and duties. But freight and insurance we should subtract. Minus 10,150 freight minus insurance 1,250. If you subtract this, we'll get what value? CAF value. What is the CAF value, sir? 33,600. On this again, BCD and SWS we need to levy. BCD and SWS together 13.2. Okay, together 13.2 because 12% BCD and on that SWS another 10%. Together it will come to 13.2%. Okay. Then rule 8. Rule 8 is what? Computed value method. Sir, this is like you find out from cost. Okay, you need to take the cost as per CAS4. In cost audit, you have this CAS4 standard. Na? By using CAS4, you need to find out the cost of materials and general expenses incurred for producing that good. Then add the profit plus rule 10 expenses. Then you will get the assessable value. How much profit we should add, sir? The usual profit margin. If we usually get 8%, na, 8% add. If you usually get 20% profit, add 20% add. Okay. So this is like, sir, here if they are like holding and subsidiary, related persons only this rule will come. Because only if the other one is related person, he'll share his cost details. Otherwise, that fellow will not share the cost details. So we need to check as per what? CAS4. Okay, CAS4. Cost of materials and general expenses for producing the imported goods. Profit of the exporter, expenditures as per rule 10. If you add, we'll get the assessable value. Then rule 9. The rule 9 says like, I'm tied with all these methods. Okay, see, rule 3, rule 4, identical goods, rule 5, similar goods, not possible. Then deductive value method, rule 7, computed value method, rule 8. They have suggested this many methods. You are saying like none of these methods are suitable to you. If none of these are suitable to you, then you follow whichever the method you feel like suitable. You follow whatever the method you feel like suitable. Best judgment method. Okay, rule 9 done. Then rule 10, sir. Rule 10 we need not to discuss separately. Rule 10 we need not to discuss separately. Okay, so rule 11. Rule 11 is what? Declaration. Sir, every importer, okay, shall give full and accurate details of the imported goods. Okay, he should give a declaration that he has provided full and accurate details of the imported goods. Rule 12. Rule 12 is about rejection of declared value. Where a proper officer has reason to doubt truth or accuracy, he may ask further information. Where the register, sir, understand, proper officer is having a doubt, then what he can do, he may ask further information. I mean, the details you've given, he felt like not correct. He has some doubts. Then he'll ask for further information. If you doesn't provide any information, then the transaction value, and he has reasonable doubt, you didn't follow rule 3, then he can reject that. Okay, at the request of importer, proper officer shall intimate the importer that what are his grounds of doubt. That you cannot say simply like by looking at your face only I'm having doubts, or by looking at your face eyes I'm having doubts. That you can't say. There should be some proper valid reason. So that reason has to be said here in writing. Okay, and then a chance also has to be given to you to explain why. Okay, for the doubt and all. If, okay, and then let's say, sir, rejected here. If it is rejected, how to value them? Sir, this rule is just about rejection. If rule 3 rejected, na, then what to follow? Rule 4, rule 5, rule 7, rule 8, that only. So, rule 12 does not give a new rule. It says like when rule 3, if you followed and determined accessible value, can be rejected. If he has doubts and he'll give you he'll give you a notice to you, then you need to explain. If you can't explain, or even with your explanation also is not satisfactory, then he can reject. Okay, this I said, sir, we solve this under rule 3 regarding freight and insurance. FOB plus insurance combined is given, whereas not available individually. So freight to be taken is what? 20 percentage of FOB plus insurance value. Understand this one I said. So then valuation of export goods, sir. For export goods, sir, most similar like imported goods only. Need not to solve a question also. Customs rules 2007, rule 1. Whereas import goods, na, customs import valuation rules. Here export valuation rules. Rule 2 definitions not required. Determination of method of valuation. For export goods, what is the value, sir? Transaction value, assessable value, which is what? FOB. FOB we should take. That also which FOB? FOB customs we should take. Transaction value can be taken as assessable value provided seller and buyer are related, but such relation did not influence price. If the value cannot be determined under rule 3, then it should be determined under rule 4 to rule 6. What is rule 4? Value by comparison. Comparison, it could be like kind and quality. Identical good or similar good. They should be coming from the same country. They should be sending to the same country. Understand, sir? Or even to a different country also, no problem. Same country or different country. You are exporting to a same country or different country also, no problem. You can take that value. Computed value method. Computed value is what? Cost plus reasonable margin. Cost of production plus amount of margin. Same method. Residual method. Best judgment method. Sir, here deductive value method is not there. Identical, similar, both together. Rule 4. Rule 5 computed value. Rule 6 best judgment. Rule 7 declaration. And rule 8 is about declaration. So, same as like import goods. Understand, sir? With this, we have completed valuation chapter also. Now we can move on to the baggage chapter. Okay. Shall we go on to the baggage chapter, sir? So all your doubts in baggage will be cleared now if you listen carefully. So there are like 40 to 45 people, sir, in live. One or two people only responding. I don't know what's going on to others. Just some yes or no, something you could have messaged. Now I'll feel happy. You need not to ask me like how am I, like how is my health, and all. You need not to ask. Just put a hi. are the same people only. Okay, new people. Okay, sir, baggage rules. Come to this chapter, sir, quickly. Baggage, first of all, sir, I said in the beginning, there's something called tariff classification, that for every good, okay, the similar goods are grouped and they are given a separate customs duty rate for each and every good. But the problem is, like, when you are bringing baggage is nothing but what? Luggage of a passenger. Baggage means nothing but the luggage of a passenger. Sir, luggage, na, you will not bring a simple good. You will be bringing multiple goods in your luggage. You might have a trimmer, you might have a laptop, you might have a phone, you might have some shoes, you might have gold, something. So different goods you will be carrying in your luggage as part of your luggage. Now, all these are, if they are accessible at different rates, at least you being a CMA can find out the customs duty rates. But normal people, he just went for a trip to Dubai and he purchased some gift items and all there, coming back to India. Now Indian customs officer is saying, like, you need to pay customs duty on all of them. You are bringing goods from outside India to India, this is import, you need to pay customs duty. Okay, let's say you bought goods. You are a normal person, ba. Okay, you are agreed to pay customs duty also, but you don't know which rate is applicable on which goods. You didn't study customs. You are, assume you are not a CMA, you are just an engineer, you are a doctor. You went to Dubai and then you purchased some goods, some perfume, some gift articles, some mobiles, some other things you purchased, and you came back to India. Customs officer asking you to pay customs duty. You are ready to pay, but you don't know which rate is applicable. It's so harsh, right? You can't call someone or some consultant there and asking him to assess all these things. Will not happen practically. That's why, to simplify, to make it simple, they said, like, if it is baggage, if goods are part of your baggage, then don't, if goods are part of your baggage, then don't need to tax them separately. If they are part of baggage, irrespective of the nature of good, they'll be taxed at a single rate. What is the single rate? The rate of duty on baggage is like 100%. So if you are bringing any good as part of your baggage, the tax rate on them is like 100%. SWS at a rate of 10%. So altogether, the effective tax rate is 110%. But additionally, you will not have IGST, cess, nothing else, sir. Only this thing will be there on baggage. BCD rate 100% plus SWS at a rate of 10%. Fine. But people felt like, hey, what is this? I went to Dubai and purchased some items to give as gift. Since they are cheap at cost, I purchased some items. But now these people are saying like 110% as tax. How wrong it is, like 5% tax, 10%, 20, 30, 40, 50 also fine. What is 110%, man? People are like negative towards it. Then the government given an exemption that, okay, with the effect of exemption, now the effective tax rate is not 100%, okay, it's like 35% only. On that, SWS at a rate of 10%, 3.5%. So overall it is 38.5%. Okay, the total exemption is of 65%. So out of 100%, 65% exemption, now the tax rate came to 35%. And SWS on it 10%, total 38.5. Okay, now the exemption is not available on the following. When they give an exemption, they said like on the following exemption is not available. For these items, you need to buy hard. Okay, whichever things I say. If you don't buy hard, you will not understand. Okay, what are those? Firearms, guns. Okay, the guns, missiles, all these like firearms. On them, the tax rate remains to be 110% only. Then cartridges, na, the bullets to be loaded in a gun. Up to 50, 38.5 only. In excess of 50, 110%. Let's say you brought 60 cartridges. First 50, 38.5% only. But above 50, there are 10 cartridges, na, those are taxable at 110%. Then cigarettes also. First 100, 38.5. In excess of 100, 110%. Then cigars. First 25, 38.5. In excess of 25, 110%. Then tobacco. up to 125 grams of tobacco you are bringing, no problem, 38.5. Above 125 grams, na 110%. So when on which goods 110% is applicable? Firearms, cartridges in excess of 50, cigarettes in excess of 100, cigars in excess of 25, tobacco in excess of 125 grams. On these five, okay, 5 items only, sir. Remember, the tax rate is applicable at a rate of 110%. 110%. Firearms, cartridges in excess of 50, cigarettes in excess of 100, cigars in excess of 25, and tobacco in excess of 125 grams. Okay, on all this 110% tax rate is applicable. Then again you need to by heart something, sir. Okay, next one is about annexure 1. We need to by heart annexure 1. I'll tell the purpose of, okay, annexure 1. There will be so many differences when we look at annexure 1. Okay, sir. I'll tell the purpose of annexure 1 afterwards, but first you by heart annexure 1. In annexure 1, there will be 6 items. 6, not 5, 6 items. What are those? Firearms, cartridges in excess of 50, same. Cigarettes in excess of 100, same. Cigars in excess of 25, tobacco in excess of 125 grams. These points are same. Now additionally, alcoholic liquor or wine in excess of 2 liters. Gold, silver in any form other than ornaments. Gold, silver, ornament form na fine. Other than ornament na, like you are bringing in as like coins or bars. Then LCD, LED, plasma TVs. LCD, LED, plasma TVs. Okay. So now let me write down. Firearms. What is the tax rate? %100 tax rate, excluding SWS. Cartridges less than or equal to 100, 35%. So 100%, I'll write down this. If they are like greater than 100%, the same cartridges only. If they are greater than 100, firearms no number at all, sir. Greater than 100, only on greater than 100 it is 1. Then cartridges, then cigarettes less than or equal to 100, 35%. Sorry, cartridges, sorry sir, it's 50 only. Less than or equal to 50, greater than 50. Sorry. Cigarettes greater than 100. How much? Cigarettes greater than 100, it's like 100%. Then cigars less than or equal to 25, 35%. Greater than 25, 100%. Okay. Then tobacco less than or equal to 125 grams, 35%. Greater than 125 grams, 100%. This is clear first from beginning. But then annexure 1 we read. Additionally in annexure 1, what points are there? We have alcoholic liquor. Sir, annexure 1 is having a different purpose, but majority will misunderstood alcoholic liquor also like the tax rates. Annexure 1 is the different purpose. So alcoholic liquor up to 2 liters is what, right? Above 2 liters or up to 2 liters annexure 1. Alcoholic liquor or wine in excess of 2 liters is covered under annexure 1. So up to 2 liters also 35% only, greater than 2 liters also 35% only. It's not like above 2 liters na 100%. Okay, the annexure 1 purpose itself is different. Then gold, silver other than ornaments. Gold, silver other than ornaments. Okay, what rate? 35% only. If they are ornaments also, what rate? 35% only. Then LCD, LED, plasma TVs. They also what rate? 35% only. So you should remember, sir, these 3 points, 4, 5, 6, just because they are discussed under annexure 1, like combined reading with firearms, cartridges and all, it doesn't mean these 3 points taxed at 110 percentage rate. On this, the tax rate is 38.5 percentage only, not 110. Only on the first 5 items only 110 percentage. What are those first 5 items? Firearms, cartridges in excess of 50, cigarettes in excess of 100, cigars in excess of 25, tobacco in excess of 125 grams. On these 5 items only 110 percentage. Rest all, the tax rate is like 35 plus SWS 10 percentage only. Don't confuse. Okay, in annexure 1, the similar items you see, but still, okay, annexure 1 is for a different purpose. Okay, now GFA, sir. So GFA, what is GFA? Sir, let's say you are coming from Dubai, sir. Sir, you being, not you, anybody, sir, we went as a tourist to some country. When we went to that country, we'll see some chocolates there, some kind of gift items. See, when I went to abroad and coming back, obviously I'll bring some gifts or some chocolates to my friends and relatives, right? So I'm bringing something. Okay, so now on everything if the tax, I feel little, see what is this, on everything if the tax. That's why they wanted to give me some kind of exemption here, which we call it as GFA, General Duty Free Allowance. Okay, to that extent, even if I bring some things, they won't be taxed. They won't be taxed. Not even 110%, not even 35% also. Okay, if they are within the limits. Okay, what are those first? For these 3 categories, sir. First one, I'm an Indian resident or a foreigner residing in India or a tourist of Indian origin. I'm an Indian resident. I usually lives in India only. Or a foreigner, but he usually lives in India. He's a foreigner, but usually lives in India only. Second point. Third one, or a person of Indian origin. His grandfather, father, mother, they are Indians. He's not, they are Indian citizens, Indian residents. He settled outside India, but coming back to India. So any of these 3 coming to India from any country other than Nepal, Bhutan, Myanmar. Other than Nepal, Bhutan, Myanmar. Okay. Then third one, person of Indian origin or foreign residents or tourists of foreign country coming from Nepal, Bhutan, Myanmar. Coming from Nepal, Bhutan, Myanmar only. Second one. Third one, a tourist of foreign country coming from other than Nepal, Bhutan, Myanmar. Okay, so 3 categories, sir. What are the 3 categories? First one, he is Indian resident only. He is Indian plus resident. He is a foreigner plus resident of India only. Or he is a person of Indian origin. Coming from which states other than Nepal, Bhutan, Myanmar. One group. Then second one, this set of people only coming from Nepal, Bhutan, Myanmar plus foreign tourist. He is a foreign tourist. Again coming from Nepal, Bhutan, Myanmar. Third one, he is a foreign tourist coming to India for tour. Other than Nepal, Bhutan, Myanmar. Second one is like from Nepal, Bhutan, Myanmar. Okay. So now depending on these 3 categories, their exemption limit will be changing. What is the exemption limit? First one, GFA, General Free Allowance. They can bring their used personal belongings. If they have any used personal belongings, irrespective of amount, they can bring. What are called used personal belongings? Their clothes, shoes, watches, their shoes, mobile phone, all these are like personal belongings, irrespective of amount, 10 lakhs, 20 lakhs also. Their personal belongings they can bring. Used personal belongings they can bring, no problem. Plus souvenirs, travel souvenirs. So travel souvenirs is not a much important one now, because nowadays nobody is carrying the valuable magazines. They are not purchasing. Souvenir, not like magazines, physical magazines. If they buy anything and bring to India, they are not taxable. Okay, they are not dutable. But these days nobody much spending on magazines also, right? Okay, so personal belongings from any of this category, irrespective of amount. Travel souvenirs, irrespective of amount. Now the third one, sir, the amount limit they are giving for others. Other than personal belongings, if you are bringing not personal belongings, already used personal belongings. Okay. Other than this, if you are bringing anything, if you are into first category, 50,000 exemption. Second and third category, 15,000. What is first category? You are an Indian resident or a foreigner residing in India or person of Indian origin coming from other than Nepal, Bhutan, Myanmar. Coming from Nepal, Bhutan, Myanmar, na second category. You are a foreign tourist, third category. Okay. So what is the exemption available? Let's say, will be clear, sir. Me went to Dubai trip and coming back. I usually reside in India now. Went to Dubai and coming back. So how much exemption? 50,000. All my clothes, personal belongings, those are exempted. Travel souvenirs exempted. Additionally, another 50,000 exemption is also there. Okay. But in this personal effects, sir, personal effects are things required for satisfying daily needs. I cannot say gold as my personal needs. Okay. Only the things which are needed for daily needs other than jewelry. Then, if you are a foreign national coming to India for trip, then other than Nepal, Bhutan, Myanmar, or including Nepal, Bhutan, Myanmar also, how much? 15,000. Okay, so now understand the important point. Now you'll understand the purpose of annexure. Sir, here I am having an exemption limit of 50,000. Na? In this 50,000 exemption, while claiming this 50,000 exemption limit, I cannot adjust annexure 1 items. In this 50,000 limit, I cannot adjust annexure 1 items. Okay, now I need to take an example for you, sir. I brought firearms. Firearms 50,000. Cartridge 75. I brought 75,000. Cigarettes 125. I brought 12,500. Then alcohol 4 liters 4,000. 4 liters 4,000. Okay, now we need to claim. Calculate this, assuming coming from Indian resident, coming from Japan. We need to calculate. He brought all these things. Okay. Now, first one, sir. Firearm. I am writing, sir, not covered by annexure 1. First I will take which are not covered by annexure 1. Sir, annexure 1 what are covered? Firearms, cartridges in excess of 50, cigarettes in excess of 100, tobacco in excess of 125 grams, alcohol liquor in excess of 2 liters, gold, silver in any form other than ornaments, LCD, LED TV. So not covered by annexure 1 na, cartridges up to 100. Sir, up to 50, cartridges up to 50. Sir, if 75 is 70,000 now, up to 50 is how much? 50,000. These are not covered by annexure 1. Then cigarettes up to 100. Cigarettes up to 100. How much? 10,000. Then alcohol. Sir, annexure 1, when it is covered, alcohol in excess of 2 liters. So alcohol up to 2 liters. How much? 2,000. So total is how much? 62,000. Okay. From there, I can adjust, I can claim GFA. Why? Because these are not covered by annexure 1. So GFA I can claim 50,000. 12,000. This is like 12,000. On this, the tax rate is what? 38.5%. 38.5. Okay. Then not covered by annexure 1. Covered by annexure 1. Which are covered by annexure 1? Sir, if they are covered by annexure 1, we cannot claim GFA. Okay, first one, firearm. How much is the firearm? 50,000. And taxable at what rate? 110%. Then we have what? Cartridges. How many cartridges are now covered by annexure 1? In excess of 50. In excess of 50, how many are there? 25. So 25,000. And the tax rate also 110, because in excess of 50 cartridges, the tax rate is 110%. Then cigarettes. Yes, in excess of 100 covered by annexure 1, and they are also covered under 110%. How much, sir? In excess of 2500. So this 2500 is also taxable at what rate? 110%. The usual mistakes are here everybody will do. Alcohol covered by annexure 1, yes, excess of 2 liters. How much is there? 4. Excess of 2 liters, how much is there? 2 liters. How much is the price? Here if it is 2000, here another 2000. So this 2000 is not 110%. Why? The tax rate on alcohol is always 38.5% only, irrespective of covered by annexure 1 or not. So here it is 38.5% only. But people do what? Here also they'll take 110%, which is a mistake you're gonna do. Okay, so now you'll get the total tax. Sir, everybody understanding my point, sir? Tax rate points are different, annexure 1 points are different. Tax rates points are different, annexure 1 points are different. Respond. Venkateshan, I know that if you go and see the yes, plasma TV is not 100, plasma TV is 38.5%, 35% plus 10% only. In book it is mistakes. Okay, for clarity you can open June 2025 suggested answer. They given both the options, but actually 35% is only correct, but in suggested answer they given 100% plus SWS 110%, and even 35 plus 10 38.5 also. Sir, everybody, sir, whether GFA can be claimed or not is the second question. But first understand 100% plus SWS 110% is applicable only on 5 items, firearms, cartridges above 50, cigarettes above 100, cigars above 25, tobacco above 125 grams. Only on these 5 items, 110% is applicable. Rest all, whether you can claim this exemption 50,000 or not, but the tax rate remains to be 35% plus SWS 10% only. Clear? Okay. Then the next point, sir. The free allowance of one person can't be clubbed with another. You cannot club free allowance of one person with another. Then laptop. Sir, these are special duty free allowance. The special duty free allowance is like what? The free allowance, sir, the free allowance of one person can't be. I mean, you have 50,000 limit, na? Whereas your friend is also there. So you cannot, some out of 50,000, you claimed only 20. You have 30 balance. That 30 you cannot transfer to your friend, a relative. Okay, everyone has to be assessed separately. Laptop. Then, if you are coming from any of these person you are, and your age is greater than 18, then you can bring one laptop. You can bring one laptop. On the laptop, there will not be any customs duty. You can bring one laptop. Then, sir, don't ask Super 50 always, sir. Then I have already uploaded a video called Supertham. That itself is the Super 50 concepts. Okay, so I didn't not even it's not about just releasing Super 50 concepts. I have did a video also for Super 50 concepts. It's already there in the YouTube. Okay, the name of Superthon. Okay, why we kept it as Superthon? No? The Super 50 concepts were discussed as a marathon. That's why it's named as Superthon. So you follow it. All the Super 50 concepts will get covered. If you finish that and you want additionally some more concepts or additional clarity, come to the revision series. Okay, then GFA sir, for coming from other than Nepal, Bhutan, Myanmar, Indian resident or foreign Indian tourist of Indian origin, how much sir? It is like 50,000 other than annexure. However, this 50,000 is not available to infants of age less than 2 years. Infants of age less than 2 years, for them you can't claim 50,000 exemption. You can only just claim personal belongings and travels only. Okay, then one laptop can be brought without payment of any duty when the age is more than 18. Then jewelry also there is an exemption sir. Jewelry na ornament form. Jewelry means it should be in which form? Ornament. If he is a man, he can bring up to 20, if he is a man, he can bring 20 grams with a cap of 50,000. If she is a lady, 40 grams with a cap of 1 lakh. If she is a lady with a cap of 1 lakh. Okay, for male passengers, it's like up to 50. Sir, this 20 grams, 40 grams, no more relevant, sir, because nowadays the gold prices are so high, na? So the cap is simple. For men, 50,000. For female, 1 lakh. Either they are coming from Nepal, Bhutan, Myanmar, or other than Nepal, Bhutan, Myanmar. But if he is a foreign tourist coming to India, then this limit is not applicable. Okay. And to claim this jewelry exemption, additional conditions are there. Jewelry shall be allowed duty free only for a passenger residing abroad for them more than 1 year and then returning into India. You can claim this jewelry 50,000 or 1 lakh exemption only when your stay outside India is more than 1 year. If your stay outside India is less than 1 year, this is not available. But 50,000 that is there now. The GFA. Sir, these are like specific allowances. That is the general allowance. General allowance can be claimed on any article other than which are covered in annexure. That 50,000 is applicable irrespective of how much period you stayed outside India. Laptop is also eligible irrespective of how much period you stayed outside India. But jewelry, 50,000 for male and for female 1 lakh is available. Only such person stay outside India is more than 1 year. Okay. Example, sir. Bharat, a person of Indian origin coming to India from USA for a short visit. Indian origin only, sir. From USA, not from Nepal, Bhutan, Myanmar. While his visit, he is carrying following goods as a part of his baggage. Compute the customs duty payable. Firearms. Firearms, he brought 50,000, sir. Sir, without doubt, firearms always what? 110% only. Cartridges 75. So on first 50,000, 38.5% and not even covered by annexure. Whereas on the balance 25,000, 110% and they are covered by annexure. If covered by annexure, we can't claim GFA. Cigarettes 150. First 100, 38.5 and even annexure also. Above 100, 5,000, 110% and annexure. Cigars 50. First 25. Not even covered by annexure, tax rate also 38.5. But additional 25, sir, 110% and even covered by annexure. Alcohol, sir, covered by how many liters are 5 liters? First 3 liters, first 2 liters, balance 3 liters. First 2 liters, sir, alcohol always 38.5 only. But within 2 liters, not covered by annexure, above 2 liters, covered by annexure. LED TV, always 38.5 but covered by annexure. Camera 40, laptop 60, personal effects 1,80,000. So this many he brought. We need to calculate. See, computation of customs duty. We have taken 2 columns, tax rate 35, tax rate 100%. Items eligible to set off with GFA, not eligible to set off with GFA. Out of them, firearm not eligible. Cartridges first 50 eligible, so take 50. Cartridges cigarettes first 100, so take 10,000. Cigars first 25. Alcohol first 2 liters. Okay, then LEDs are not eligible for GFA because covered under annexure. Camera, laptop is exempted, personal effects. So if you take, sir, laptop exempted straight away, personal effects straight away exempted, and rest all are eligible for GFA. Cartridges up to 50, cigarettes up to 100, cigars up to 25, alcohol within 2 liters, camera. Total 1 lakh. From there, GFA, if you adjust 50,000, then we'll get how much? 59. Then we'll get how much? 59,000. This 59,000 is also taxable at what rate? 38.5. because it is already there under the 35. Then items not eligible to set off with GFA. 5 gram, not eligible to set off with GFA, 5 gram. Cartridges above 50, cigarettes above 100, cigars above 2 liters. Alcohol, sir, first to 2 liters eligible to set off under GFA. So here we took 4,000. The balance 3 liters, 6,000, not eligible to set off with GFA. That's why we taken here. But the tax rate remains to be what? 35% only, 6,000. And LED TV, 60,000. Okay, even though not eligible for GFA, but the tax rate remains to be 35 only. So total 1,25,000 here, all this after claiming GFA, here it is like 85,000. Then BCD at a rate of 35, here 100. SWS at a rate of 10%, here also at 10%. So total custom duty payable. These are the points. Sir, able to get the point, sir? Able to get this question? Everyone? Sir, if this example you can get it, all the questions in our material we can do. All the questions. If this example you can understand properly, okay, take screenshot of this example, solve this example. If you could solve this example, and whatever the questions we are having, we can solve. Then the next points are transfer of residence. See, what is this point? A person is engaged in profession, including employment outside India. Okay, he is already employment or into profession outside India. Now he is transferring residence and coming to India. Sir, he went to USA for a job 3 years. Then coming back to India, he lost his job. Okay, because of this Trump rules and all, he lost his visa, he lost his job, so he's coming back to India. Then normal person when he's coming back to India, he'll bring his clothes and all only. But he's shifting residence. We'll have some more items. The whole household items will be there. So for them also, if this 50,000 only, not enough, right? So addition to the GFA, addition to the laptop, that jewelry allowance, all those, some other extra benefit also will be given if he's transferring his residence. If he's transferring his residence, but after some certain period of time. Not like one day only I had residence, sir, then I had homesick, so I am coming back. That's not valid. After some reasonable period of time, you should be coming back. Then in addition to the bona fide baggage, GFA, jewelry exemption, laptop exemption, addition to that, this is also given. Okay. How much, sir? It's based on how much he stayed. How much period? 3 to 6 months, Then he can bring personal and household articles additionally to the bona fide baggage 60,000, no tax. Additionally on 60,000, no tax. Provided he should be an Indian passenger. Then it is coming within 6 to 12 months. I mean, he stayed for more than 6 months and coming back within 12 months. More than 6 months he stayed and coming back within 12 months. Shifting residence. Then up to 1 lakh. Up to 1 lakh. 1 lakh. More than 12 months. I mean more than 1 to 2 years. Between 1 to 2 years. Then the amount is like 2 lakhs. About 2 years, then the limit is like 5 lakhs. Okay. So what are the limits, sir? First 3 months only he is coming back. Nothing. 3 to 6 months. 60,000. 6 months to 1 year. 6 months to 1 year. 1 lakh. 1 year to 2 years. 2 lakhs. About 2 years, 5 lakhs. About 2 years, how much, sir? 5 lakhs. So again, I am writing, sir. Everybody should remember this. Okay. 3 to 6 months. How much? 60,000. 6 months to 12 months. 1 lakh. 1 to 2 years. 2 lakhs. About 2 years, it's like 5 lakhs. This is the additional exemption available when he is transferring his residence. Okay. What are the conditions? In all these, such person shifting residence should be an Indian passenger. Indian passenger. Then for 1 to 2 year and 2 years, sir, you could see, sir, here 1 to 2 years. Let's say, sir, he is coming back in 25, 26. Sir, a person coming back on 1st March 2020, sorry, let me take it like 1st October 2025, he's coming back. Came back. Okay, after how many months? After 25 months. After 25 months, he came back. Okay, that means when he went 9 months here, 12, 21. Okay, 25 months. Okay, from here, past 3 years. Past 3 years na, 1st October 2022. So after 25 months he is coming back now, we'll claim what 2 lakhs exemption here, right? Because after, sorry, not even 2 months. Okay, not even 2 lakhs, we'll claim how much exemption? 5 lakhs exemption we'll claim. But what this provision is saying, like, should not avail such concession in the preceding 3 years. Sir, if you take in 1st October 22 to 2025, in this period, he didn't have availed the same kind of exemption. Sir, what happened? This fellow, first June 2023, he went. 1st June 2023, went to USA. Okay, came back. 1st October 2025. How many months, sir? How many months? In 2023, like 9 months. Then 12 months. Okay, so many months happening now. So I'll take here like 1st September only. So 1st September, if you take now, September, October, November, December, 4 months here in 23. Then 12 months in 24, then 9 months in 25. So if you add total how many months? 25 months he stayed. Okay. Now, today he came back, right? 1st October 2025. 25 months, he is eligible for 5 lakhs exemption. What the provision says, like, check the past 3 years. Past 3 years not till 1st October 2022. Sir, what happened now? Actually, he came back from Australia on 1st June 2023 after 3 years. So 5 lakhs already he claimed exemption when? On 1st June 2023, he came back from Australia after staying for 3 years. So he got 5 lakhs exemption there already. Now, after coming back from Australia in 1st June, now June, July, August, he is there in India, and again on 1st September, he left to USA. And in USA again, he stayed for 25 months, and now he came back again and want to claim 5 lakhs exemption. Now, what the provision says now, check within 3 years already he claimed exemption. Yes, from 1st October 2025 to means past if you go now 1st October 2022. So I mean after 1st October 2022 only he already claimed 5 lakhs exemption after returning from Australia. Now since 3 years didn't lapse, again he can't claim this 5 lakhs as exemption. Okay, so when you are claiming this 5 lakhs or 2 lakhs exemption for staying more than 1 year or for staying more than 2 years, 2 lakhs or 5 lakhs exemption you are claiming now. The same exemption you didn't have claimed within the past 3 years. If you already claimed now, then this is not available. Let's say sir, this fellow, he stayed for 1 year 11 months and came back to India, but he wanted to claim 5 lakhs as exemption. Okay, 1 month short is there, otherwise 1 month shortage is there, otherwise he might have stayed for 2 years and he can claim 5 lakhs, but 1 year 11 months only he stayed. Okay, for 1 month shortage, his visa expired, he can't stay there also. Okay, his exemption is restricted to 2 lakhs. In such kind of genuine cases, he can apply to the ACDC. They can condense that shortage also. Okay, they can condense that shortage also up to 2 months. Okay, then Out of the above limits in 60K, okay, we have discussed the limits here na, 60,000, 1 lakh, 2 lakhs, 5 lakh, 5 lakhs based on the period. While claiming exemption for those amounts, you can't claim annexure 1 items and even annexure 2 items also. So usually for GFA, we can't set off annexure 1 items. But for this transfer of residence, extra limit is there na. For the 60, 1 lakh, 2 lakhs, 5 lakhs, you can't even adjust annexure 2 items also. What are annexure 2 items? Annexure 2 items are like a color TV, video home theater, dishwasher, domestic refrigerator greater than 300 liters, deep freezer, video camera, cinematographic films of 35 mm and above, gold, silver in any form other than ornaments. So these and annexure 1 items. Both these cannot be adjusted with these amounts. What are those, sir? Annexure 1 we already remembered. Additionally, these also can't be adjusted. What are those? Color TV, video home theaters, dishwashers, refrigerators above 300 liters, deep freezers, video cameras, camera films above 35 mm, gold, silver in any form other than ornaments. Sir, if they are mentioned in Annexure 3, no problem, you can claim. What are mentioned in Annexure 3? VCR CD players, VCR players, music systems, AC, micro oven, word processing machine, fax machine, LPG, laptop, domestic refrigerators within 300 liters. Okay, Annexure 3 items can be adjusted. Annexure 2 items can't be adjusted within this 60K, 1 lakh, 2 lakh, 5 lakhs, the transfer of residence limits. Okay. Baggage includes accompanied baggage and even, sir, accompanied baggage na, which you are carrying along with you. Unaccompanied baggage na, you are going to come within a month. So you sent luggage already. That is, without you the luggage sent na, then that is called as what? Unaccompanied baggage. See, baggage not carried by passenger at the time of his arrival, but sent before or after, usually within 2 years to 1 year. That is called as what? Unaccompanied baggage. Unaccompanied baggage. Sir, in baggage, the transfer of residence question alone I will show you, sir, because that example is enough. The example which I discussed is enough for you to solve any question. Okay, this is transfer of residence. Jagridhar, an IT professional, a person of Indian origin residing in Denmark for last 14 months. 14 months. He wishes to bring a used micro oven, 1,24,200, with him during visit. He purchased the oven in Denmark 6 months back. He is not aware of Indian customs rules. Could you please provide him? Yes, sir. And he is staying for more than 1 to 2 years and coming back. Then he can claim exemption of up to how much? 2 lakhs. Okay, 2 lakhs. Okay, which items can be adjusted with this 2 lakhs? Any item except the items covered under Annexure 1 and Annexure 2. Sir, this is like what? It's a microwave. So check whether Annexure 2 covered is. What are covered under Annexure 2? Color TV, home theater, dishwasher, refrigerator, deep freezer, video camera, cinematographic films, gold, silver in any form other than ornaments. So micro oven is not covered here. So no problem. We can adjust with that. So 1,24,200 adjusted with 2 lakhs. So he is not required to pay any customs duty. Then the last one, sir. Baggage rules to crew member. If such person is a crew member, sir, crew members, na, they'll be going regularly. They'll go and come back, go and come back. How much they can bring? If they are leaving their job and coming back, normal rules. If they are leaving their job, so then 50,000. Otherwise, you are a pilot, sir. You'll go every day outside India and come back. Okay, you are a pilot to the flight which goes to Dubai. So every day you go to Dubai and again come back. Every day you have GFA, allowance, laptop, and those things, na. So what you will do? You'll start doing business now. Okay, so every day you will go there, bring something worth 50,000 for lower amounts, and now you sell it there. Okay, so every day there will not be such kind of GFA to you if you are a crew member. If you are leaving the job, then fine, that 50,000 GFA can be claimed. On duty, na, crew member of vessel or aircraft allowed to bring chocolates, cheese, cosmetics, gifts up to a value of chocolates, cheese, cosmetic gifts up to a value of 1,500 for family or personal use. Up to 1,500 for personal or family use. Okay. So with this we have completed even the baggage, sir. Baggage also. Okay. So I am closing the session for now, sir. If at all you wanted to solve any question from this, sir, from this chapter, if you are having my material, Sir, institute material also there are questions, or any material are there, the same questions will be there in baggage. Question number 7 is worth solving. This one you can take screenshot also, no problem. Question number 7, this one is worth solving. And then I'll show you one more thing, sir. Yes, this question number 8, this question number 7 and question number 8, if you solve, and that transfer of residence, these are enough to solve this, these are enough. Okay, so we'll meet again tomorrow. We'll be discussing with the duty drawback and then GST exemptions, those topics. Okay.